Good morning, my friends. It's Monday, March the 4th. And my friends, it's been a slightly disheartening day for a ThetaWave trader. Not the ThetaWave trader, just a ThetaWave trader. My friends, an example of making sure you follow the rules, you read the rules. I entered that. Well, let me just make sure that I'm even on the thing here, otherwise I'm talking to no one. Stand by, I'm going to make sure we're live and ready to go here. There we are. Where's my buddy Kirk this morning? Is Kirk in here today? No, no one's here yet. Well, I guess I'll just keep this all to myself right now. We'll wait to see who turns up on a Monday. Okay. So as usual, I will do my morning ablutions. I will give you guys a rundown on what I'm looking at for the week. So what I'd like to see today in NASDAQ, now that we've just topped the high, is come back down into this range, equal highs here today. That's my objective for a downside run, or a small range day for a fair value gap. Tuesday making the low and then continuing higher. Same thing for ES, though ES is more likely just to come back into fill this fair value gap here. Not fair value gap, sorry, that just rebalance this up close candle here on the daily. So we're looking for it to come back to this old high here, create a fair value gap, or close in. But either way, downside objective for today. If it doesn't run up first, take that high, then come back in. This has already taken the high, so I'm anticipating that it will come back into the range. Dow Jones. Dow Jones has returned already into its fair value gap here, midpoint, holding on the mean threshold. We're back up to that order block, so we're pretty much stuck between here and this midpoint right now, and this order block. So it needs to break out of here in order to get higher or lower. So neutral on that one. And let's have a look at Dixie. Well, Dixie finally drove up there on Friday and hit the line that we've been calling for a week or so. It hit it perfectly. Now it's projecting away. So I'm expecting more downside now on American dollar. I expect this to get right through the other side of this daily fair value gap here. We've had a wick through it a bunch of times. I want to see a body drop through that, then start getting some leverage on that for further downside into the mean threshold of this candle here. So I'm expecting the American dollar to kind of break up, but we're stuck on this order block here, so I have to be reserved because we're stuck in here and on top of that inversion. So bearish order block, bullish order block, kind of stuck between the two of them. So we'll see if that mean threshold is closed above today, or we close below the mean threshold of this candle here. And we've already eaten through it multiple times here, so I think this is just getting weaker and eventually going to fail on you. And in that regard, we'll have upside prices on British pound. So we're still looking for these old highs to get taken out here, pushing into that daily fair value gap inversion here. Yeah, I see more upside prices for pound, euro, Yep. Upside on euro, taking out these highs here. Look for return into this daily fair value gap up top. If we come back today and find support off this inversion, look for it to give you a kick, and we want to stay inside this candle's mean threshold. Canadian dollar. See, now this one is I'm still kind of neutral on this. I still like them to see the American dollar take those highs out, but that would mean that the American dollar would be stronger, or the fact that Canadian dollar just sucks anyway. It's directly related to oil, so we'll have a look at oil in a second. So I'm pretty neutral. We're still going sideways with Canadian dollar. Aussie or New Zealand dollar. I'd like to see this run back up into this daily fair value gap here. This inversion. And then I'm back into a neutral stance after we need to get through here in order for me to be more bullish again. This could still come back down to the downside, so. Spartanberry, good morning. Dave Barry, how you doing, buddy, this morning? Good to see you. Thanks for all your input on the Telegram channel. I do appreciate people popping on there and giving their thoughts, asking questions, being vulnerable. One of our guys put some stuff up there the other day. It wasn't completely ICT related stuff, but you know, I want to see people be kind to one another. I don't want to see people go for someone's jugular just because they give an idea. So otherwise people end up just clamming up and not saying anything. And that's not the kind of environment I want to breed here. I want to breed a place that people can come and, you know, if you got an idea that's ICT related or as close to ICT as you can get and you want to share it or it enhances your ICT experience, by all means let me know. And you should be able to share it in an open forum where people are going to support the fact that you brought it forward. So I hate to hear comments like all that shit. It's like, well, that's a value judgment, and it's not even a good one. Give me a decent value. Like, tell me why you think it's shit. I don't want to hear it's shit. Just tell me, give me your honest opinion. Give me an appraisal. Use your words. Don't just say it's crap. You know? And, you know, thank the guy for bringing it forward. That's what I want to see. Is it a utopian world? Wouldn't it be beautiful if it was? But hey, we'll get there. People realize that it's a safe place and you can have fun and just learn. That's what I want. Anyway, thanks for putting that for us, Dave. Victor, buenos dias. My buddy from Mexico, Victor. Victor, my friend, how are you? Buenos dias. Richelieu from Russia, my Russian friends, how are you? Good to see you. Copano Moss, hey man, I'm watching from Botswana. Oh, no way, Botswana. I love it. I love the African country. I love the African people. I just think that's amazing over there. My wife worked there for years in Zimbabwe, and she loved it. She loved teaching down there. So, yeah, welcome Botswana. Furba, you know my account was 6% up and I did scalp and now it's break even. Oh, Furba, control. If you're up 6%, you're risking too much too fast, man. New here, spoke off the Telegram. How does one join? Oh, the Telegram channel, you can connect with it in the bio section on the description above. In the ThetaWave channel itself, you'll see in there 4 links, and then you can just click the Telegram channel. And again, when you're coming into there, folks, remember, be respectful, be kind, help people out, encourage people. If you're rude, you're gone. I'm not going to have any drama. I don't want any drama in there. I just want people to share stuff. I don't want people to feel bad in there. So let's just use your words. Be kind in there, people. Just be kind. Simo Show. Good morning. Sven. Good morning, my friend. Good morning. Good morning. So now I've got a few people in here. I'm going to share with you some. I've never traded cryptocurrency, and I entered into that competition, that leap competition that TradingView has on, and I've never traded crypto. And my buddy Tex, if he was listening to this right now, he'd be like rolling his eyes. I didn't read all the contest rules, so I just started trading, and I started trading this cryptocurrency, and I'm going to share with you my account, because it's I checked the leaderboard this morning. I saw this guy was up $9,000. I thought, well, I'm up $28,000, and I just started trading this yesterday. And I thought, why am I not on the leaderboard? Why am I not winning? Well, apparently, even though I was giving some, and I'll show you some of the trades that I took so that you don't think it was all about crazy leverage. This is where I started. I started here on the 4th. And then I started, there's my entry here. My entry's up here, here. I got in here, here, got out there, got in here. Like, you want to talk about precision, look at that, right there, and then right there. I got out up there, got in here, got out up there. So, and I was just smashing it. I was like, oh, this is easy. This is like, no, sorry, let me take that back. It's not easy. I was just smashing these trades. Now, this is great, man. I'm gonna roll this sucker up pretty quick. And then and I'm like, I checked the leaderboard this morning, and clearly I have violated the rules, because they said the most you can trade in Bitcoin, and I've never traded it, so I didn't know. The most you're allowed to trade is 1.4, and I was trading 50 and 100. So I way over leveraged. So I guess I'm out of the contest because I was growing it too fast. I guess I was leveraging too much, which I thought was okay, because when you're looking at 1 or 2% of your account really close to your entry points, I was looking at the percentage I was using versus the actual the trade was too much. The leverage was too much, according to them. 1.4 was all you're allowed. So no, I haven't seen Kirk. My wife's saying, is Kirk there? No, I haven't seen Kirk for a while. I don't know what happened to Kirk. So yeah, that's that's what happened. Anyway, let me just continue on with this stuff here. So read the rules before you get started, folks, because I just blew an opportunity to make potentially $10,000. But it was fun trading crypto. I've never traded that, and there's some beautiful volatility in there right now. It is, the algo's just riding that sucker, and if you can see them, you can catch some just bomber trades, and like $28,000 in one day, about for like 5 or 6 trades. It was crazy. Anyway, what are we in here? U.S. Japanese yen. So we're still in that consolidation. So no opinion. Lots of liquidity sitting above that market. Looking up at this breaker up here, we still have this level that's in range. We may see that run for that before it finally rolls over and comes back down. Gold, or these dudes here. Oh, I'm only up $100 now. I got into this trade. I don't know when I put this one up here a couple of days ago. And we'll see where it goes. So this will be good, because if this fails, I'll show you how to exit this on a fail, hopefully at a break even. So we're trying to manage the trade. I'm trying to get back down into this discount array, even though that's probably 50% of that range right there from low to high. Yeah, 50%, see that? Low to high, hit the 50, and that's kicking off of that. So if this is driving price higher, that was the exit point I should have taken as a, and I don't want to say this after the fact, because, you know, it drives me nuts when people judge a trade they took after the fact when they didn't have that information. So this could be a scale out point right there, that swing low. You take it out of the nearest swing. So I could have taken out a portion there. I was looking for a lower discount array back into this fair value gap. So my stop loss is sitting up there. And we'll see. I don't want to lose this inversion right here. So if I close above the inversion on an hourly, then come back to it, I'll get out, and I'll be out at a perfect place to break even, because then I know that they're running for the highs, even though the mean threshold's most likely the place to run. So I don't mind it wicking up in here into the order block, as long as it gets back down and closes below that or inside that inversion. So anyway, there's gold. Look at gold. Gold went into a little stratosphere right now. Consolidation, CAM 1 entry right there. If you remember the CAM 1 entries, CAM 1 entry, consolidation, break above, CAM 1, CAM 2, and CAM 3. You have all three of them with one candle. Now this was good, because I think Dave, you gave me this question, and I'm going to kind of quickly explain it here. I've got a couple of minutes before the opening. The CAM 1, 2, 3 model. So if this is the consolidation, okay, let me just make this nice and big so you guys can see what I'm talking about here. When you have a consolidation like this, make notes so you understand what it is. And you'll find the CAM models on the channel. You'll find it under 3 ways to attack a consolidation. It's a half-hour video I produced for this consolidation, how to attack a consolidation. And there's CAM 1, CAM 2, CAM 3. They're based on ICT principles. They're not mine. I just named them CAM 1, 2, and 3 because ICT hasn't named them. So I've named them. But these are his concepts. I don't profess to give you anything new other than something more specific with time, which I share when it happens. I share you specific times that ICT hasn't talked about, but I've found that works well for me. So sorry, let me just create this. Let me find the box. So here's your consolidation right inside this range right here. Okay. Consolidation. Draw that out. CAM 1 is the top of the consolidation. Okay. Let's do that over here. High to low. There's your consolidation. You could take it from inside here too. I'm all right with that. We have CAM 1 model. So as soon as you break the high, CAM 1. If you're one of those people that says, I just want to get into this thing, my stop loss is down here, you have to calculate the distance between here and your stop loss and 1 or 2% of your trade. So if you're really expecting a long, deep stop loss like this, it must be down here. Okay? So if that's your consolidation and you're like, I want to get in the trade, you're like one of those twitchy people that like to get in real fast. I don't care. I don't mind a little drawdown. Or you're like my buddy Derek, a little more conservative, likes to pick his spots. He's a laser, like a steely-eyed missile man, that guy. He can see he wants a discount. So if you're looking at that range, he says, I want a discount array. So I want to get right back into the middle of that fair value gap. Well, what's near that? CAM2 model, which is the midpoint. From there to that low, the midpoint is CAM2. So now you see this when it came in, CAM1 hit it. Let's say that didn't hit that. And this candle went boom, shooting all the way through. And you had an entry there. I like to put all three entries, 1, 2, 3, put all three of them in there, and I'll explain them as I go again. Your first one enters there. So as you enter here, you go bang, you're in. And somebody else down here is a little more conservative. They say, I want a CAM2 model. I want to be in the middle of this consolidation. It comes all the way down, trips in the CAM2 people. The CAM1 people are already in. CAM2 model is already in. And then you got those ultra conservative people that say, hey, I want, if there is a CAM3 opportunity, I will take the CAM3 opportunity with the maximum amount of leverage. So you minimum leverage there because your stop loss is down here, so 1%. So let's say you put one contract in here, it was 1% of your account. And you get down here, that might be 2 contracts for 1% of your account. And down in here, when you see this CAM3 model, CAM3 is the high and the low that takes out the leg that takes out the consolidation. 50% of that right there, you enter in right here. So you go boop down, your stop loss is here, leverage, maximum leverage is right there. You're closer to your stop loss, so you can afford to take maximum leverage. Again, it's your maximum leverage, 1%. So right down here, that may be 3 handles versus this guy's 1 handle up here. Yours is 3, and then by the time you get up to here, you're already in an R1.5 already by the time the CAM1 guys are back in play. Now, in some cases, you will only get a CAM1 entry. So if you're ultra conservative, like in this case, and you say, I want to be a CAM3, you weren't even getting in. So now you say to yourself, what's the likelihood? Well, every CAM1 model gets in. Not every CAM2 model gets in, and certainly not every CAM3 model gets in. But every CAM1 does. So now you have to decide, do I want to get in on every one? Do I want to be particular about my entry, or do I want to be specific about my entry? Okay, so again, that's all your own trading style. You do your own thing. Fill your boots. Enjoy yourself. Find whatever works well for you. Don't copy mine. Unless it's the style you like, then again, fill your boots. Have fun. All right. Good morning, Kitty. Cooper. Tino. Same mark, macros, etc. Work even breakers. Oh. And good morning, everybody. So let me explain here. So we got our CAM1 can come down, clip you in. So now let's watch. Let's just see how many times this model repeats itself. We have a consolidation from here to here. Let's see that consolidation. There's the leg that took it out. Consolidation, draw it across. CAM1, you don't get a CAM2, just short of it. CAM1, dip down. You're running for the most recent high. Don't get greedy and run for 50 PD arrays above you. You run for the nearest high. You scale out there, and great. If you scale out a portion there, and then it comes back and takes you out, and you go, oh, I got too greedy, I was aiming for here. Now you know why you take out at the first scale out point. They're small snipes here, folks. They're not major runs. Though they can be, which you'll see here shortly, they can be huge runs, but you gotta pay the trader. So if you move to here and your stop loss was down here and you quickly took out a portion there, you quickly move to break even. And that's, again, how you manage your trade is your business, but I'm going to show you how I manage mine, just so I can say, some people say, you move your stop loss too fast, too soon. Well, you don't know my style. You don't know my trading plan or my strategies to maintain my principle and try to clean up as much. If I have to snipe these small little 15-minute runs on a medium leverage hit, then I'll take out my piece there, and I'm all right with that. I collected money there, and you're still judging me for moving my stop loss. Meanwhile, it comes back into CAM1. So I go CAM1, hit, comes back. Oh, it hasn't taken out that high now? Relative equal highs, ooh, I'll do a cam 1 again. Until proven otherwise, I'll just keep hitting cam 1, run. It doesn't come down, boom, then it finally cleans it out. Now I'm like, oh great, here's another cam model. So now I've moved all these guys up, but you can just rinse and repeat, hit it over and over and over. So anyway, let's go back up here. So here's your cam 1 model on the high, cam 2 models in the middle, right there. Cam 3 model is take the leg, 50% of the leg, and that's right there. And if you run it, and if you're running above the most recent high, which is right there, from here to, that's 2052 all the way up to 2066. Well, I don't know about you, but if you enjoy 14 handles, I enjoy 14 handles, don't you? And you're looking at that going, look, that's also the mean threshold of this down close candle, which is a breaker. And you go, isn't that delicious? I'm expecting some resistance off of that. Not only is it the 50% of the leg, it's 50% of the, and if you want super precision, you say, I'm going to take 50% or mean threshold of the breaker. You're on the money, bing, with absolute precision, and you're off to the races. What's forming in here, folks? What's forming in here? Hot diggity dang. It's another consolidation with a cam 1, cam 2, and no cam 3. You see there's no cam 3 in there? Because there's no leg that takes out the consolidation. It's just cam 1, cam 2 option. Now what do you want? Do you want a cam 1, get in here, or do you want to wait, be more conservative, keep your stop loss tight? Sorry, it would have to be right down here. There's a consolidation hasn't been filled. There's a little breaker down here. You decide. I gave you the models. Sorry, Michael gave you the model as I just gave you the words for them, and hopefully you get to understand a little bit about how they work. And that's gold. That's gold. If gold would have paid you mucho dineros, trust me, lots of money with real power precision, not to mention the fact that this was a daily inversion, fair value gap came back right on top of, oh yeah, cam 1 and a daily inversion, fair value gap. This is called confluence, folks. And it's also called mean threshold of a BISI. Confluence 1, confluence 2, confluence 3. How many confluences do you need, my friends? How many do you need? Ooh, you say I want one more. Okay, here's a breaker. So 1, 2, 3, 4. You got these 4 overlapping confluences that says, hey, this would be a pretty good place to put a frickin' buy order on gold. See, look for, the more confluences you get about a specific area, the more you can start getting excited about it. And even if you didn't take that, you think this is great. Oh, and then you see it shoot up like that. A lot of people go, oh, I missed it. No, you didn't. Wait for confluence. Oh, look, it's a leg that takes out that low and came back, got a drive here. So is there intention, now that it's got above this high, to go higher? Hells yeah. Bye. See you, love. Have a good day. Love you. Give me a call. Let me know. Okay, sorry. I gotta get. Lock the door. What is it? Minus 21. Oh, you're right here. Oh, what's that? New York Open. You've been babbling too long, Darren. There's an opening here. There's an opening here. Anyway, you get the idea. So these models repeat over and over. Are like, oh my goodness. You will find these things over and over and over again. Whether or not you trust them is entirely up to you. So if you're just, here's my advice. Here's my advice, folks. Take this with a grain of salt. If you're going to practice the cam 1, cam 2, cam 3 models, and I again suggest that you watch the video, on that, or just go back and review this little segment we've done on the beginning of our show here. If you're going to play with these kind of models and you want to learn how to trust them, start off being ultra conservative. Go down into this level, because now I understand there's a psychology that you're going to be going through when you try to start playing with these models. Because let's put it this way. If you were into a Cam 1 model right here, and it went all the way down to the bottom in here and actually touched here, and all you see is a big bold down candle, you think Darren's wrong, that whole thing sucks. Your brain starts to really screw with your head. Whereas if you say, you know what, I want a Cam 3, I want it right here. If it doesn't come to me, I'm okay with it. If it leaves, I can go, okay, that was a Cam 1. Fair enough, it worked. Don't get upset with the fact that you missed it. Don't beat yourself up. Positive mindset, people. That's the ThetaWaveTrader. ThetaWave, getting into the perfect mindset, the perfect theta waves inside the brain for ultimate clarity, ultimate level of decision making. It is a place where you can, in hypnosis, it's a place we can get you to, that we can find where major repairs go on with your psyche, with everything. Anyway, I know it's more airy-fairy for some of you, but theta wave, get inside the right mindset. Getting in the mindset, trusting your PD arrays and trusting your setups is where you'll start to make your money, and you'll do it so that you don't feel anything. You're like ones and zeros. When you look at that setup, you'll go, oh, I'm going to do a Cam 1 entry. It's easy for me to say that here, but if you saw this and you saw that blast out, you go, oh, I love it. We have a displacement to the upside with a firm intention, not just a wick, a whole damn candle up there. I love it. One of your entries might be, as soon as I get a fair value gap for me here, I'm in. I'm going long. I don't mind leaving my stop loss way down here. I just calculate the leverage, and it might be like 0.1, 0.2 of a lot, whatever. That's my 1%. You may go, I'm going to put one in here at 50%, and I'm going to put one here at close. That's another entry. That's not even the CAN models. That's a totally different entry. You may go, oh, I just want to come back to this old high here, or this old high. So that'd be 1, 2, 3. 3 different entries that way. And you would have hit all of those for your 3 different entries, and off you would have gone. So there's multiple ways to enter this trade. I'm just showing you the CAM models. So practice it as close to conservative as you can get. So you're risking very low leverage, very low probability, because then if it does a little dip down, it's the dipping down past your entry point is where your brain starts to, the fear and the doubts and the self-talk start to come into a play. If you see it hit it and it starts to leave, what does your brain start to do? Oh yes, you're looking over here, you're watching them numbers grow, and you get totally stoked. You're like, I nailed it. And you're super positive with yourself, right? But if it dips down and you're like, oh, I totally screwed this. Oh no, what did I do wrong? What did I do wrong? If you don't have your plan that allows for that kind of slack in your trade, then you haven't built your trade plan. In my opinion, you haven't built your trade plan, or you don't trust your setups properly. So get closer to your thing so that you have get closer to your entrance and your exit so you reduce some of that mindset. I thoroughly believe the theta wave mindset, getting your head clear, getting your trade plan set up, getting your fail-safe set, and looking for when your trade's going to fail before your fail-safe is hit. All that stuff I'll show you on here. That's what the show's all about, helping each other out. Then pay it forward. Pay it forward. Help somebody else out with this, you guys. Don't just hoard all your money. Help somebody. Pay it forward. You'll feel so much better. You will. I know some of you may say, I just want to put food on the table first. All right, well, let's get you there. Don't forget to read the rules if you're going into contest, though. I totally botched that this morning. I was excited, though. I thought, I've never traded Bitcoin. We could really nail some good ones. So anyway, I hope you got something out of that this morning. Let's get back to Mr. NQ. Ah, damn it. It did hit it. I was short here this morning. I'll show you. So I don't think I was bullshitting you. I was short here this morning. Off here. I saw this on the hourly, this fair value gap. We took that high out. This is what I was expecting. You'll hear me call this morning. I was expecting it just to take this high out, and then we get a fair value gap form and come back into it, get short. I got in short that this morning right there, and then I took out here, here, and sold one there, got out here, sold one here, got out here. So yeah, now I can see that it's rinse and repeat. So you can see why this is me. I can tell you from experience when you start talking yourself out of a trade. And I'm seeing this coming back into here today. So key off of an order block, carry on down. We're going to wait for, even though it's 9:30 now, we will wait and see. I'll start reading candle by candle for you in a second. Group. Join the group. Group, join the group. He's over there on Telegram. Welcome, group. Abs. Abs is here this morning. Good morning, Abs. How are you? I was totally using Bitcoin or ICT methods to trade Bitcoin. That's all I know, you guys. I don't know anything else. I only know ICT stuff. I only know it. And I had intentions of trying to get that sucker to, like, because they start you off with $100,000 account. I wanted so much to drive that to $1 million by the end of the month. But I over leveraged and screwed myself up. But hey, I tell you, I've always been a staunch screw Bitcoin. Bitcoin's stupid, but you know what? Not till you get in there that you start to realize, oh man, that Bitcoin it's got some beautiful on the 1 minute because it's all over the place, and you can't. Because I tried trading on MT5 once, and then the spread was just unbelievably ridiculous. But on TradingView, it's like it was a very small amount. So you're putting in whatever you put in there is what you're getting. You don't have these big monster spreads. So you catch some super accuracy, and even though it was a demo account, like 28% in 1 day, that's pretty amazing. And that's not like crazy over leveraging. It was a matter of precision entries, and I could afford to go with a higher leverage because the drawdown was virtually nothing. Like, it was very minimal, so I could afford more leverage. But according to the rules, doesn't matter how much leverage you can afford, you got to have no more than 1.4, and here I am doing 100. So I'm way over. Same macros, etc. Work even breakers, etc. Yeah, all that stuff. Cupertino. Yeah, for sure. Exactly the same stuff. Exactly the same stuff. Okay, let me get all. I don't like having. You saw my entries anyway. Just to let you know that was what I was looking for to go short. So we're going to wait and see. I would like to see this at 10 o'clock pop up above here one more time, and then create our entry. Look for our silver bullet setup, because I think we're going to get a banger of a setup today. I'm hoping for anyway. So does that help you, Dave? Barry, I hope you can understand that CAM model a bit better now, a little clearer. And if you guys need any more clarification on that, by all means, let me know. And I'm super keen to help out any way I can. Good morning, Kitty. Well, I see it now. So good. Thank you. Great stuff. Thanks. Spartan Barry. You're welcome. You're welcome. Okay, back to order block, range, premium. We're through the midpoint already, so chances are we're coming back and just revisiting the inside of this to go higher. Consolidation. Consolidation. What do the bodies respect? What do you call this, folks? You call this Cam 1 or Cam 2? Write it down on the side. What entry models do you see there? Cam 1 or Cam 2 or Cam 3? Cam 2, Cam 2. Ah, but you missed it. I know. See, that tells me a little bit about you guys. I like it. It's both. It's Cam 1 and Cam 2, right? Because we went through, hit Cam 1 people who were just saying, I want to get in on this. I don't care. Cam 2 models, and you're like, how many people saw big bold candle coming in there going, and then they cancel their stop loss, and then all of a sudden it reverses on you. That's the pain right there. There's the psychology of a trade right in there. There's where all the doubt comes in a matter of 30 seconds. It starts to override your fear of making a decision. And then where did you go to? What are we running for? Old lows. Quick little snapperoo on some cash. Okay? And then what do? We come back for another Cam 1 model. You're looking for this here. We're coming back to fill here. So I think it's still going up. So I'd take a portion off there right now. That was a Cam 1 model again. So these Cam models can repeat off the same consolidation too. And again, if you're monitoring your PD arrays, you say, I want a quick snap to here. Now these are the people who are like candle junkies, right? You're one of those people that love the smell of a good candle. Darren, this one smells so sweet. I'm going to go for the stuff. I'm going for the discount array right here. I'm going to clean up a little piece. I'm going to get in here, get out there. There's 24 to, there's 11 handles right there. 11 handles. And if you're running for this guy here, and there's another order block down here, which is what is this? It's a mitigation block. It's not a breaker. Does not go above an old high. There's nothing in between here. There's a swing point, so that's a mitigation block. So you want to see it come down, either take that out. So if you got that first one and you're scaling out and you're running for here, I'd be slammed up tight with my stop loss. Would be right up snug against that thing in case, because it's so tight right now, it could be just running up for higher highs, right? Again, that's just me. Let's just protect your principal, snatch some money out of the market, put it in your pocket, then double down on it later. We're compounding, folks. We're compounding our money by doing, again, multiple entries, but you got to have the confidence to look for the PD arrays. And you'll hear me say this: premium discount, over and over and over and over and over again. Look for the small range you're in. So don't go for the big one. There's a swing point here. So there's your discount array inside that range. Do we get a reaction off it? No, it's continuing down. Great. Next level is there. Stop loss, slam to break even. I manage it on the back end. So now there's different ways to manage a trade. I might do a video on managing back end and managing the front end of a trade. The front end's obviously a no-brainer. You pick your spot. You put your stop loss or your take profit in here. You go to bed. So those, usually I like to look at front end trades is when I don't plan on being around. I put a trade on and leave. Front end trades are great because when you leave, all these retracements, the back here where the psychology kicks in and you self-doubting yourself, or you do the Darren and talk yourself out of a trade. In here, instead of talking yourself into the trade, you talk yourself out of it. Whereas if you just put that on there and walk away, come back and go, oh man, it worked perfect. Different story, right? So that's the front end. Quick and easy. Walk away from it. Set put your plan up there and let the plan trade itself out without any mental interference. And again, the way you have to do it is make sure you really set your plan. You must set your plan, set your fail-safe, because your fail-safe is the only thing that's going to protect you. You won't learn the other stuff I'm going to teach you about, how to watch it before your fail-safe is taken and the market switches. I'll show you where it switches, what candle it switches on, where the doubt has to come in, and where you have to have a rule now. You develop your own rules for I'm out. If it breaks this rule, I'm out. I don't care if I'm underwater, I get out. And that's developing professional discipline. Theta wave mindset, my friends. Theta wave mindset. J on the 1 minute chart, 929. It's a breaker block, right? 929 breaker block, 929 right here. That's a breaker, yeah. Last up close candle before run below this low. It's a swing point, right? And sometimes they can be all in the same candle. So don't put a ton of faith in it, but look at breakers are what I call a senior array, like a senior citizen, wiser. Like somebody's up in there, like let's say 58. Those are wise people. Like 58 and their birthday's in July. Those kind of wise people. That's like a senior candle. There you go. You finally got your array. If you're entering your Cam 1 model again, you just got your take profit right there. Boop. Anyway, so senior array, strong array, wise, it tends to hold price. If it doesn't, you really have to start doubting. If it blows, especially the three, remember the 3 strike rule? Strike 1, hit the bottom of it. Strike 2, hit the open. Strike 3, you hit the middle and you close above it, you go, ooh, chances are we're going to run for higher prices. In this case, the mean threshold was traded above it, did close above it, but then snapped back. So is it precision? Does it work every single time? Nope. As you can see right there, if you're super picky and you say, no, Darren, that closed above the mean threshold like you said it would, we expected that to go back up. It didn't. It retraced all the way back down into a discount array. It could still go higher. If we lose this mean threshold, then that is really going breaker to mitigation block. Mitigation blocks are not that strong. We're expecting price to go down for today, so I don't know why I was pushing for higher prices. Probably because I saw it break below the midpoint of that or break above that. So, but again, overall is down. We're bias is down for the day. I'm not changing my bias. It's when you want to get in. So, Cam 1 model, Cam 2 model, you got both of those, and then Cam 1 again. Delicious Cam models. I tell you, you could make your career just on that setup alone. Those 3 models could be your model that you use, and you don't care about anything else. Don't worry about all the other the other stuff that's out there. Just focus on the Cam 1, 2, 3, and get really good at them. Get really, really good at them, and don't worry about any of the other stuff, because your consolidations happen every hour. If you're a candle junkie, you love the smell of candles and you want to get in, there's plenty of candles for you to get in on. Scented or unscented? What would you prefer? Lori, my man. Good morning, good morning. Kitty, sorry, I think I missed the Cam model thing. Can you guide me where I can find more about it? Yeah, it's in the video inside our section there, Kitty. Like the whole, like go into my video collection and you'll see it. It's kind of, it doesn't have the face on it with the ThetaWaveTrader. It actually has just a 3 consolidation, 3 attack model. How to attack a consolidation 3 ways. And so I call them a Cam model. They don't say Cam on them, so I might have to reword that. So it's like half an hour video, but it kind of explains it. And every time I see a cam model set up, I'll show you so you can see it. Then you can decide whether you want to trust it, or I'll take the trade so you guys can see how much I trust them. Thanks, Dave. Dave, you bet. So it's invalid now. What? What's invalid? The cam model? Oh, because it ran this low? That's a good question. I think if you wanted to juice the crap out of it, what's your fail-safe then? If we come back to that cam model, I would say the only thing, watch this. This you'll see on a breaker. When you see a breaker get run through, when it gets run to again, it tends to line up with the mean threshold. Then it runs to it again. It'll end up running to the opening, and if it runs it to a third time, it tends to run to the wick if it's in a bearish descent. And I'll point that out to you when I see it, because it happens not rarely, but it's not as often as I would like to see. But when it does happen, you see it, and it becomes very clear, and you go, oh, I know what you're up to. I expect you to come back into the midpoint of that now, or the bottom. Good, you've done it. Now I expect it to start really dropping. So we've hit the midpoint. Now we've hit near the bottom of it. I expect now to see if it does come up to hit the top before leaving. I would like to see it come in here one more time, hit that, and then run for these lows. And that would be the low. Your stop loss would still be above the high, but I'd expect to see that one more time come back up there, because now we're starting a new range here. Where's the midpoint? Is that candle there. So if we just come back to 50%, which is the mean threshold of this candle, and rolls over and comes back down, then you won't get your cam model. But if it does run back all the way back into this order block here, which is a what? That's right, it's a breaker. It runs below this low. So that breaker right there, where's the mean threshold? Right on the bottom of cam 1. One more time. Run back down here. And your stop loss is up. And if it doesn't, and it runs for those highs, then as soon as it closes above that again, now you decide, I want to close out my fail-safe and say, the rule is I do not want to see this midpoint get broken on a close. If it does, I'm out. Because generally, if it breaks the midpoint, it goes higher on a close. Again, that's my rule. That's not, you develop your own rules, your own way to manage your trade. I've got a very specific way I'm trying to adopt to trading, managing my trade, and I got to be okay with taking losses. I talk myself out of way too many really awesome trades. So I definitely don't want to have a poor trade plan and don't follow my rules. Thomas, good morning. Thomas is one of our new guys. I met him on, was it Facebook, Thomas? Byram? I think that's where I met you. Very good morning, Lori. Thomas. I definitely watch it tonight. I appreciate the knowledge you share. Hey, Kitty, you are most welcome, my dear. Most welcome. All right, watch this. See, got an order block. We've come back into this guy. Stop loss would go here. We're aiming for higher prices. Looking for that swing point right there and that order block. Maybe even a cam 1 again, people. Watch for a premium array now. That spot right there is what I'm looking for. Stop loss would be here. Entry would be right here and here. Again, I'm counter trend trading. We've come back into this order block. If the mean threshold holds, this gives way and we start to come back down again. So if I'm wrong, here's how you manage this if I'm wrong. Watch. Watch very carefully, my friends. And I will show you. Okay, so we go from here to here. So this is going to be, I want to be wrong on this, so I can show you how to fix this if I'm wrong. I want to be wrong, so see, when you want to be wrong, you can't be wrong. Come on. Come on, no, I don't want to be right. And we're just looking for a quick little snipe. That would be a quick snipe from there to there, back into this order block. Premium discount, right? I want to get to a premium array. So mean thresholds holding. So you have to say to yourself, is that all I want? 10 handles? I'm out. Snatch them and go. Back to, now we validated this as an order block, so this becomes important. So now I want to see this provide a level of support, and then we continue to the upside. Tap it right there and leave. Oh, good. Okay, so here we're going to be wrong. If this goes wrong, right here, you see this? My stop loss is here. So here's your opportunity. We wait for this to close. So if you're entering here, here, and here, or just on the bottom of this, because you're super conservative and tight, wicks do the damage. Wait for that to close. Got 15 seconds. So if this low, your stop loss doesn't get taken out before this close. So this is your failsafe. It slams through here, your failsafe's got you covered. That's the maximum 1% you risked, right? Now we're still okay because we wick through, but we still got a body inside this thing. So up she goes again. And now this is a valid order block. So we got the mean threshold of that candle. Come on. Go wrong on us. So we'll get back into the sync with the market again, right? So let's say you pick the wrong direction and you're trying to just counter trend everything, right? Because you're one of those people that want to get your wife a new diamond ring, or you want to get your wife a new set of sneakers or something. And you're wrong. Let's say you want to head back up here, and it says no. I'm still going in this direction. You'll see right in here where that continuation occurs. Right off this guy here is what we're looking for. And it's all on whether or not that candle closes. So now, okay, good. So I don't want it to take the low out just yet, so I can give you an idea of how to get out of this trade. It's probably going to run us right through here now. So this is the trend. We're obviously heading in a downward trend. I'm expecting to see this fail, but I want to see, no, you would have. This is the fail-safe kicking in. If that doesn't hit it, we've got an opportunity. So now we've got 30 some odd seconds left. The fact that it's ran through this multiple times now would make me go, I want to get the hell out of here. I would have closed this out, like right there. But we'll wait and see what this closes at. We need it to close below this, and you're going to see. So our entries are right here. And you go, oh, my stop loss is getting squeezed. I'm probably wrong. Wait for the close, because the wicks can do the damage. Here we go down to the last 7 seconds. Does it snap back and stay inside that thing? No, good there. Now watch. We want to see, here's your one opportunity now to get out of this and save your stop loss. If your stop loss doesn't get taken now. Yeah, there you go. Your stop loss got taken. So how this works, watch right here. This is how you're going to watch this. See how it closed below that? The moment it does, you can either end your trade right there and save your stop loss, a little piece, and your stop loss here is just a very minimal amount, or you can do, and you got to be really quick to do this, okay? And it happened too quick for me to get in there, but watch carefully. Right here, that's where it closes. You say, I'm out. My entries are right here and here. It's a very minimal loss. I'm out, versus taking a full stop loss hit here. If it trades back, goes boom, and trades back into the inversion, which is what we usually expect it to do, you close out right there. So those of you who entered in long there, you waited for it to come back in, the conservative approach, 1, 2, 3, the conservative approach, you got in, now you go, I'm out right there. So you break even. instead of taking a loss, which you would have taken right there. So you've got to see this. If it doesn't take you out on a fail-safe, which it can, two, if it gives you an opportunity now to say, I want to get out, right there is where you get out, either on the close or when it comes back, taps you, lets you get out for zero trade, then you say, oh, now I'm in a downward trend again. I'll wait, reset, and wait for my next setup. That's how I manage trades like that. You either take a full hit sometimes, you either take it right there and cut down your loss, or you just get gutsy. This is gambling. This is rolling the dice, hoping that it comes back into that so you can get out with zero loss. So you can go gamble for here, cross your fingers and pray that it comes back and doesn't take that out first, closes up higher or closer to your stop loss. As soon as it does, you get out. Now it just ran the lows. Now we've got a setup. Now we look for a new setup. So that's how you manage that. Really tight, real quick. So again, this is not a stop loss. It's a fail safe. I should put FS there instead of stop loss, because if you think stop loss, that's the level you expect it to come to. No, that's a level I don't want it to come to. If I'm really sharp and I capture this really quickly here, and that's where you've got to be in the chart and managing this from the back end, live price action, right there is where it was telling you you're going to get taken out right there on the close. You're next, because I've closed below the inversion, and it literally came down and took you out. Okay? Does that make sense? Does that make sense to you guys? Did I get rather long-winded? I hope that it makes sense. I think it's heading for the low. PD array below. Yes, I agree with you, Lori. Market mavens. Morning, Derek. Let's go, my friend. So again, mean threshold. Now you've got to say, here's where you get to flippy floppy. So now we've run the lows. Here's the fair value gap. Are we now on top of this? Find some support. And when you get into consolidations, folks, be prepared to go, I changed my mind. I changed my mind. The Tony Robbins approach. I will be absolutely committed to the decision I make right now and I reserve the right to change my mind tomorrow if I learn something new. So I can change my mind and go long if that broke, come back to it, find some support and start running up. Again, you're in a really tight little this candle to this candle. We've just blown through that, so your ass is next. We have 3 different arrays all through one candle. You drove through it. Now come back into here. And we have now we're looking for a silver bullet setup. It's 8:04. Wait for something clean. Lori's saying, look here at the hourly on Friday. See how we've come back down and tapped it right here? So if we do get a run back up into our consolidation again, now that we've run this low, we're looking for a run back up into here. So these highs are potentially, we got this low right here on the hourly. There's the silver bullet right there. The fair value gap, pop into it, go lower. Back to the order block, find some support at this. Wait to see where it closes. There's your mean threshold. You're aiming for this low here real quick if you want to pay the trader, or if you're in it for the long haul, let her buck. How you manage it from there is entirely up to you. I don't want to keep trying to push my way of managing a trade on you guys. I know you all have, you're very smart people, and you all have your own way of managing your trades. So if you're in that one, good luck to you. I wish you all the best. Now, what's your plan? If that's your entry there, what are you just hoping that it gets to here? Are you hoping it gets here? Like, what's your backup plan? Where does it fail for you? Where does your trade fail, and where do you have that little fail-safe rule that says my stop loss won't even get taken? Unless it rips through me, it won't get taken. Something will tell me that it's changing its mind to go long, and I have to develop the rule. You must have the fail-safe rule in there and follow it to a T. To a T. So what is it? Ask yourself that. You've got a couple of minutes to design it. Or design it as it's, you get better and better at it, you'll design it as it's happening. It might give a long opportunity, you're right. If we just have that tap here, we get a long, at least back into this consolidation and this order block. So I do like the idea of coming back to revisit Cam 1 again. Again, it's not clean. I'm not touching anything in here. But if you guys did go on this and you're aiming for here, where does it fail for you? Where does it fail? Before it hits that thing. And if this fails, I'll show you where it failed after the fact, but I've got my spot where I think it could fail. So pick your spot and see if it's the same one as what I get. Not that mine's going to be right, but because I get to use hindsight, so I can form fit it. There, failed. Now you get out. That was your opportunity to get out. It's like magic. It's like magic. Now, how did I know it was going to fail there? What was the rule, people? Do you see? Again, my rule, not yours. It's not what Michael teaches, but it's what I look at for my way to look at that for when I know it's going to fail. Right there. See that little inversion I didn't draw out? From there to there. We came back up, hit it nicely. We traded above it. Right there. Beep, 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 beep. Fail, fail, fail. Come back in, give you an opportunity to get out. So your silver bullet that you put in to go short failed right there when you closed above it, and gave you an opportunity to unload your position right there. And if it rolls over and comes back down, I don't care. It failed. That's my rule. Whatever your rule is, you decide. So that if this turns around and comes back up higher, you're going to go, maybe there's something about that rule he's got there. And you're welcome to it. And if you're really kind of gutsy and you really believe in your stuff, there's my rule for failure. So you just say, well, then I'm instantly, as soon as it comes back, I'm going to click sell and then buy again. Because I know I'm on the other side. I'm going to watch it and I'm going to aim for this spot here and then this spot here. And I'm going to take my trades up higher. Does that make sense? I'm going to get to that point where I will literally go, nope, I'm going long here now. No, I'm closing it out, going long. And literally, that'll be what I'm looking for. So you'll see that sometime this year, I'm going to trade like this, up and down and up and down and up and down, trying to stay focused inside each one of those arrays with those rules applied. And we'll see how well I do. But if somebody tells you can't trade minute by minute, or the markets don't tell you that there's a shift minute by minute, because look, we're back to the mean threshold of this candle now, and we're coming out, we're popping on it. So now you're stuck in the middle of that range. You're in this candle here and that candle there. If this candle runs finally up above this one, that and that become breakers. Breaker to breaker, they're right in the middle of the two of them, and you're getting jammed up. So you're off of that guy there, the midpoint. You're coming back into the top of this candle's body here now. See how the high was hit right there? We tapped the high, you're coming back into the body now. So this is more of a negative feel. Order blocks valid. Now we have this inversion again coming back. Watch this little inversion now. You want to see it close. See how it's closed below it now? So now you flip-flop back and forth, and when you're stuck, when you're in consolidations, you'll see this. I'm long, I'm short, I'm long, I'm short. Well, you're in a consolidation. This is called getting beat up in a consolidation. So you wait. You simply wait for more confirmation. We know we've got a bias to the downside, so I don't want to counter trend too much unless I want to just do a quick snipe to a rejection block, for example, or just run this high out. Because now this becomes the breaker. We just ran this high out here, that high there with that candle, down, boom. So now we're running for higher prices. See how when that failed, we just came back into a discount array and continued pushing higher through that mean threshold. See how it closed above it? These are little hints that tell you I got further upside to go. So look for a run up here, and now we're up into this breaker up here. So breaker here to breaker here once this one gives way. So we have to see this close again above here, not just wick up into a rejection block, because it can wick and roll over and come back down. And again, watch your bias. So right now I'm more biased long than short. Even though the overall bias is short, this is saying I'm coming back into a retracement inside a range. What's 50% of that range? To pull your fib tool. Again, these are all things you got to do over and over and over again to confirm whether or not you've hit 50%. So now we've run up into a premium array, right? We roll over and come back down now. I got no problem with that. It ran into a premium to get some more orders and ran back down. Did it run to an array that we're familiar with? Well, yeah, we went through this one. See the mean threshold, held price here. It finally broke right there and then ran all the way up into mean threshold of this candle here again. Pulled off of that one. Because this too is a breaker. Breaker down, breaker down, breaker down. So you can see how all these breakers have their little support kick back. Look for the breaker down here. So it's breaker to breaker to breaker to breaker to breaker, back and forth in consolidation. Hopefully you can see that. It seems pretty clear to me anyway. Inversion. Look right in here for inversion. A tippy tap in here. There's the high, there's the low of the inversion, of the imbalance. I just want to see if that reacts off there. It doesn't. Okay. Order block's valid now. You're between here and here. This candle, that candle. Swing point, swing point. Order block. So we want this mean threshold to hold price. If it doesn't, we continue on with our bias. See how they overlap PD arrays now? What'll happen is they'll bang around in between these two. There's no real fair value gaps in there, inversions to really key off of anymore. There is some nice little imbalances sitting right in here though. In the premium section. So you can see almost like an entry here or an entry here to go short. I prefer that one. Stop loss would go here, go for a short, run for this low and that low. There she be, popping in there. Now, again, if it closes above this, you ought to hope that it gets back to this before your stop loss gets hit. You want to see it close below that and keep coming back down now. That's just a slight little wick, does some damage into a rejection block, a continuation on the downside. And again, you're between here and here, so don't take the trade. I'm just giving you an example of a PD arrays that we're reaching for, that's all. So we'll see what happens there. Because now this is a valid order block. So you're not even with this one anymore. You're between this one and inside that one. you're back, they're literally overlapped right now. So you want to see it tap once more on the inversion, the price imbalance. Now you want to see it just start eating through this guy here. If it starts to push up higher through the midpoint of that wick, if we close above the 50% of that wick or above this point here, again, that's one of those get out. If your trade's there, then you want to close it out because you might be running for this high here, which is where your fail-safe is going. When you have overlapping PD arrays like this, you're going to get beat up. Again, consolidation. There's advanced trading inside consolidations. You've got to know, you've got to be expert at your PD arrays. You have to see them clean, clear, and you have to see them quickly. In this level of 1 minute trading, you have to see them clean and say what's acceptable, what's not acceptable. When does it fail? When doesn't it fail? When you have overlapping PD arrays, you really better know your arrays, like rejection to rejection, order block, mean threshold, right there. We're below this guy, so you're in these two guys now. So now it's compressing. It's got to now bust out of here. It's running out of arrays to bounce off of here. It's got to break low or break high to take out the highs and then come back down, take the lows. But you can see it's running out of arrays in here now. It's got to bust out of here. It's only got that swing point, this swing point left, and that array and that array. You're literally sitting in those two candles. So make your move, mister. Make your move. Waiting for it to go lower yet. That consolidated beating up people who's looking for a big run from there. Yeah, you don't want to be playing inside that. You want, that's high resistance, man. High resistance, but it can be red. It still can be red, but it's high resistance. Why would you want to even, unless you're one of those masochists and you like to get beat up inside or whipped with candles? Oof. You're getting hot wax dripped on you right here. Vittorio, are you looking for price to reach below 18.2, being the 50% of the last swing up in NQ? In here, you mean? Yeah, I'm looking for at least 50% of that range. At least 50% of that range for a retracement would be really nice. But if it doesn't and starts to break out above and starts to violate our hourly or 15-minute inversions, and we'll see it starting to happen here on the 1 minute first, long before that happens, and it starts to violate it to the upside, then I say that's really strong for an upward run for the next price leg up. If we don't hit the 50%. If we do hit the 50%, then that could be a pivot point right off of 50 and start running. Or we just get a little dip down into the discount array and then start running up higher. See how it finally gave up the ghost and said, okay, I've run out of arrays in here. I've banged up into that guy one more time. There's a little tiny imbalance there. I ran up, tapped him, and now I'm finally giving up the ghost because this thing's been eaten up. Whap, whap, all the way through it. Then finally took the bottom, and now we're back into this order block here, mean threshold. See the mean threshold here? It's banging off of that again, and it's starting to lose it because we're slightly closing below it. So you look for this arrays up here, been eaten up. So unless it tries to push up really hard and fast to sweep all these people who are trailing their stops below us here or above us to go lower, you wait for a breakout out of this. Wait for some impulse leg to occur before you try to get on this. But read it. Practice reading this minute by minute, candle by candle. And I tell you, you'll get better and better at all those other charts that you want to play in. If you develop a trade plan in here and you execute it in an hourly chart, man, oh man, you're going to get some huge profits. You still got this. You still got some big drawdown and some big stop losses. It's all relative, but the profits are much bigger. And if you're precise on an hourly and you're aiming for an hourly objective and you're with a level of precision there and you execute in here, like if you're looking to get back inside your consolidation for a cam 1 entry, well, there is a cam 1 entry right there. If that was your consolidation high low right there, that's your cam 1 entry. Now if this breaks and comes back through here, closes on that, comes back up, then you got cam 1, 2, and 3 for further upside prices, right? So look at your cam 3 model on your hourly chart setting up potentially, or we just continue reverse, come back to the bottom. There's your cam 1 and we're going short from there. Same here, consolidation, cam 1, boom, consolidation, come back, cam 1. So you got 2 cam 1s this morning already, or today. Order block confirmed with candle closed past it. Yeah, when the candle, it doesn't have to close. In order for a candle to get validated, you just need to run above it. Like that candle there, if that's a down close candle, it gets validated the moment you get above it, right there. Now, I'm with you, Dave. I'm with you. I prefer to see a body break it, but it is valid the moment the wick gets above it. That's now a valid order block. We want to see a body get above it. That gives me a little more juice on it. I like to see that just because it just feels like a stronger candle. So like this candle right here, for example, we wicked below it. But when you see a body get below it, you tap back up into it. Look, you get right off the open there. Not a lot cleaner because we have a body that trades below the candle's low. Then it starts to say, no, I like to see that as an order block. I can get some leverage on. And then you look at your 3 points of leverage inside that candle. And I always use the same 3 points of leverage on every candle, from above and from below. Got it? Got it good. We're still growing this community, everybody. I'm so happy. Look at that, 368 people. We started the year off with 120. We've doubled. We've more than doubled in 2 months. Honored. I'm very honored. Thank you very much for tuning in, you guys. Guys and gals, guys, I say guys, I mean everybody, guys, gals, and all those in between. I love you all. See that mean threshold? Look at that, bang, right off that, nice and clean. Snap off of it. Now, if you drive through it, I don't care. I love seeing the reaction off of those arrays. And I go, ooh, that's a nice snappy reaction. Now where are you going, sister? I want to see that come down to a discount array or create a fair value gap in here that I'm going to come down, tap on, and then start driving through it for an upside. Or maybe I'm going to drive through this inversion now, come back to it, tap it, and start running lower. So as these things are forming, start forming your plan in your mind. Once you've seen these models really quick and fast, you'll start to go, oh, okay, this could be a nice little setup for a long, or this could be a nice little setup for a short. We've traded above. Now, we haven't taken any highs out, so this little fella right here becomes an area of interest, right? You take your you always draw this out. Get in the habit of drawing this out. Don't get lazy. Don't go, yeah, whatever. Draw it out until your eye sees it really clearly. Then you'll just be putting your crosshairs on your lines like this and go, oh yeah, look, there's that little inversion. It just came back. Inside the inversion, yes, we cut through candles. I'm not just trying to find anything in here that supports price. There's nothing in here that would support price right there, except that little inversion right there. So I want to see this come back, tap this, get some support, and start running up above these highs. Again, it's counter trending from where we want to go, but it is looking for what Laurie was talking about, getting it along off back into that hourly range. So there's your tap on it. You want to see that pop off of there. You don't want it. So here, if you want to catch your longs, let's do this. I'm going to do a trade right here. I'm going to put a trade long, buy it right there. Because this is where if it fails, and it probably will, I just want to demonstrate this. It's not live. Well, it's live. It's in demo. So if I'm wrong, my stop loss is going to go right here. So this is what I mean by doing this. Stop loss is here. If it does, that's a fail safe, not a stop loss. If it rips through me now, if it closes in the next 10 seconds below me, I will close the trade out right at where I got in, if it comes back to me. So here's your one. You can say, oh, one, I'm out. I'm out of there. It literally went straight down, so I'm like, no, I'm out before it hit my stop loss. Now, if you wait, you say, oh, I just wanted to come back up to me here and tap me in, that will be your safe. But because it literally opened and started shooting down, I got out. It did not even, my rule is this, really. Here's another little smaller rule I haven't shared with you. If it pops up, my stop loss now in my mind goes to the open. If it comes back to that open, I close it out right there. If it keeps coming back up, then I close it out when it gets back to me. But if it opens and starts going down right away, I close it. Because now it's violated my other extra little internal rule, because I know it's coming lower. So I didn't give it an opportunity to snap me out here. I was like, nope, it's coming. I'm out right there. It probably took me out in here somewhere. But that's my other little smaller rule. It closed below me, which is good. I'm glad it did that so I could demonstrate that for you. And I'm looking for it to come back into my opening again to see if that was wrong. But see, this is downside now. We violated it to the downside. We don't even come back to get support. We just ran for the low. So even though it snapped down there to take me out, as soon as it started going down, it did not pop up, I'm out. Because I don't want it to go below. If it goes pop up like this, and then I go, great, stop loss in my mind goes to here. And if it comes back to me, I get out there. But the moment it comes back and tags me here, if it came to here, like say halfway, pop down, tag that opening again, I'd out. I close right there. I wouldn't wait for it to come up one more time and tap that. Again, it's just a stupid, smaller little rule I got. But now all of you are saying now, well, yeah, but if you waited, well, no, my stop loss would have been taken. That's my fail safe. And yet, if it comes all the way back up into the order block, or this inversion here, yeah, I could have got back out again, but got to stick with your rules. You can't beat them up after the fact if it turns around and comes back to you. I didn't have that information. I didn't know this candle was going to do this. It took the low. So, follow your rules, man. Hopefully that's clear. I don't mind taking a little hit. Prove my point. CFTC traders, NA commissions, and spreads got to be a killer. Commander, end of the month, you should reach 500. Well, that means I'll have to have a shower. You get to watch my mug. Watch me getting all crazy up in here. I gotta use my hands all the time. I'm pointing and stuff. You guys gonna be like, okay, you're just distracting me now. Take the damn face off of there. Which is fine. If that's what you guys vote, then I don't mind taking my face out. So, now, to go down, we want, there's your entry. Same thing again. Enter. We'll do the same thing again here. Short. That's the rule. So the same thing again. I've bought right up tight to that. So if I'm wrong and we have a body close above and comes back, taps me out, I'll get out. My stop loss will go up here. Like laser precision entry, and it'll be like a perfect exit. So at break even, I just keep waiting for my rule to get broken or supported. And when it gets supported, then it'll be off and away. So we wait here and watch the next 12 seconds to see if that fails before it takes me out. Mean threshold, you want it to hold 6 seconds. Again, the same rule. We'll do the same situation in the back instant out closed above me. See if it comes back there, I can get out. Get out. Oh, get out, get out, get out before it gets me. Here's what you got to do here. You can't have that click, double check, go over here, click. Just do an instant. Go to your settings in here. Go to trades and go instant order placement. So when you hit out, it's an instant out. See, it came back and would have, my stop loss was right there. It came back, it closed above, came back, tapped me out. So the loss is even more minimal. And you think that's going to start running for the highs. And if it doesn't, I don't care. It broke the rule and I'm out, and you wait and you're in a consolidation. So can we expect this kind of crap where it changes its mind, goes in the opposite direction? Welcome to the ring of Mike Tyson. You're between that candle and that candle now. Hopefully you get to see when you're managing it real quick, you're in and out. If you're wrong, you're wrong. If you're right, you're right. You'll love, trust me, when you're right, you'll love it. And when you get into these consolidations, you say, why am I keep going in and out here all the time? I'm just getting beat up. Well, of course, wait. This is all high resistance. But you can see why it's high resistance, because it switches, but it's going from array to array. That got validated right there, came back into mean threshold perfectly right here. And we're heading for a higher array, discount, premium. Running up into the premium right here. We went through one candle, went through 1, 2, and we're right up into the third one. We didn't close above it. So that's not a good array to run through 3 of them all in one. Didn't close on the third one, but it certainly did wick into it. Came back, tapped that inversion again. That's support to go long. So you see how you're going short, how you're going long, you're going short, you're going long. So again, if you're smart enough, you just go, oh, wait, I get out, get back in. So just go close, buy, instant, and you're back into a long again, running for that high. And by just making that high right now, that takes away all the losses you took in here, like right there. Right there, you're out. And that covers all the losses you took here. And you wait now. If you haven't learned your lesson, get the hell out of there and wait. But you can see that's the simple rule. There's some little complexities that you need to study in here off of these things to see how they work out for you. But see right there, that's the indication we're going long. Come back, tap it. First high taken, second high taken. Looking for this one here now. Lori's probably all over that trade right there. Vittorio, you know, this, I must confess, I don't know, I don't rely on SMT divergences. As you can see, I'm so into the detail of a 1 minute chart that all those other things that you've learned about SMT divergence, the ES influences the NQ and the YM affects the ES on a Tuesday, Wednesday, I have no idea. I'm being honest with you. I can't give you an honest feedback. I haven't studied that enough. I've literally got down to playing in a 1 minute candle, and I can tell you what each bloody wick means to me. That's how detailed I've got in my analysis. Now, that does not take away from anything that you've been taught about ES and how it affects NQ or NQ affects ES. I don't know that. You talk to Derek and Abs; those guys are really good at that stuff. Me, I'm just showing you how I muck around in a 1 minute 1 minute chart. So sorry, Vittorio, I can't give you anything solid there. I literally is when does the market change direction and when doesn't it on the minute chart. So we could be running, like we talked about, we could be running up into model 2 and then running through that. Then it becomes model 1 on the opposite side because we've broken whatever area. This here is just the indication that now we're going long. I'm completely long right now. I'm not short. I'm long because of that right there. And I won't go short, even though the overall bias is short, until I see something on the 1 minute chart that confirms that we're going short. So I will see when price action changes in the opposite direction. I have no idea what's happening in ES, YM, and if this affects this, I'll see it right here. That's when I see it changing directions. You guys may have seen something up there in the YM and the ES, and I bless you, man, for being that awesome, accurate. That's incredible. Good for you. I don't understand it, so I'm literally waiting for when the market switches back and forth on a 1 minute chart for a level of detail. So there's a CAM2 model. And be prepared, if you're wrong, your stop loss is going to go right up here. So your CAM2 model, really tight. Your stop loss will go right above that. Now what you want to see is you want to see this or this break down to confirm your entry has been like stellar. So there's a CAM1, CAM2. You're revisiting that consolidation above you. If it fails, then you know how you can. That's not a standard rule. If it will come back 3 times and fail, I haven't calculated that. So now think about this. Also have this in mind. CAM2, CAM1. Where's my exit? My first exit. Right back here. There's your first swing, and the next swing is down here. So it's quite a long, and they're really bullish candles here, right? And I'm not talking myself out of a trade. I'm just saying, if that's a CAM2 entry, your stop loss is really tight, just above that, and wait. Because there's nothing in here that can prove whether or not it fails now, other than this little inversion right here. Draw that one all the way out. You don't want to see that fail. Oh, no. Of course there's a failure point. If you close above 50% of this, close out the CAM2 model before it runs here. That's the rule. That's my rule. It's up to you. Use it or lose it. It's entirely up to you. If you want to come up with your own, I'm cool with that too. We should not see a full revisit of the whole high there, and certainly not on a close. So if it closes above 50%, CAM2, this is a precision entry one now. If it closes above that, that's my little pop above type thing right there. Thanks for your perspective on SMT and the 1 minute tapering. Yeah, sorry I couldn't give you more on SMT. Derek he's really good at that. Abs, if you just put SMT on the ICT index, you'll get some really good stuff right from the horse's mouth. Yes, good point, Abs. Thanks. Yeah, go to that SMT index thing. When in doubt, go there. I won't give you if I don't know absolutely what Michael was saying, and I've got it on one of my tabs in case I need to reference it. I'll type it. You're going to be clicking away on the keys sometimes. I want to make sure I give it to you as cleanly as I can from Michael's perspective. If not, just definitely always reference there. Don't listen to anything I say. If you're not sure, you want to prove it, get Michael to prove it. Get the horse to tell you. So here's one of those ones where you go, okay, now, do you believe your trade? Now what I'm looking for here is a close below here. If I get a close below that, I will enter in my trades here to go short. That's a CAM 2 model. CAM 1, see how it comes back, found some support at that one more time. Now I want to see a body close below here. So this is going to be the so that right there, inversion, look at it where it hit. Right on, oh, pretty close, didn't hit it yet. We have not closed below this. We must close below here to get into it to go short. Stop loss goes here. What's your psychology saying to you right now? When it's starting to come back here, what's your mind saying? What's your theta wave mindset? Order block's been validated. This is where you start to talk yourself out of a trade. Stop loss goes here. Again, if you're not taking the trade, that's good. Don't take what I'm telling you to take. I'm just kind of, this is all hypothetical. Mean threshold, we're still above it. We're not through it yet. Well, fair value gap, so using the recent uptrend, this one right here. I'll use that one, and then I look for a premium array, discount array, and I go like array to like array. So I look, once I found one up here, we haven't closed below it yet. So don't jump in. Those of you who are jumping in too soon, you could get you just got your wick handed to you, and you're going to get clipped if you're not careful. So wait until we get confirmation. Right now we're still bullish, so don't go short yet. Again, just my opinion. Some of you may be short and you've caught just a bomber trade right there off of the CAM 2. But confirmation of CAM 2 with a little more confidence, when you close below this and you come back in trade to it, then I take my stop loss and slam it right up above, right at my break even. Because then I shouldn't see it run back through here and take out the highs. Because if it does, then chances are it's going to have a body that breaks above that high so I can get out. And I'll be in some profit in a CAM 2 entry. Even though it's small, you'll still be making profit. Hopefully you're following my logic. Sometimes my ADHD, I can run ahead like 10 different steps. I can see it 10 steps ahead and I'm not really explaining it very well, as my engineer friend said to me yesterday. He says, okay, break this trade down for me. And I said, do this. He goes, whoa, 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 stop. You've got to explain this so I understand. I said, okay, well, you're the engineer. Ask me the question. So he's asked me, what are you looking for here? Oh, okay, I'm looking for this. Write it in. So I text it, put it in text form so he can see it. And he goes, well, and then it goes to here. Okay, well, how do you know it went to there? What are you looking for? Well, this block right here. Okay, well, then just put that in there so it's clean and I understand that. Look for this. When it does this, look for this. I'm like, oh, okay, got it. So I want to do one where you can kind of create a PDF of specific trades, setups that are, this is what to look for in, and show that same setup in multiple different configuration and morphologies in terms of candle morphologies and how you can get in on them. Now, how many times did we get beat up inside here? We took trades going short, then we took it going long, then we took it going short and got out. Now, we got shook up 3 times, and then the fourth time, it finally ran for some objectives, right? This is the psychology of consolidation. It breaks, it shakes you, and if you fail enough times, you just won't enter anymore. Then they can finally take a run on you. What's the average person's fail rate? Is it 3 times, 10 times? How resilient are you? Or do you just go, no, that's my rule. Every time it comes through, I'll buy it. And eventually I'll make back all the little tiny losses I took here. And I'll make bank. See, those who were going short there, you did not get a short here. It's still long. And the fact that we're banging off of this right now, I would close my CAM2 model right there, just because of this mess. It's not reacting off of it the way I'd want it to. Retail people saying, it's making a bull flag. Can you not see the bull flag? It looks lovely. And we're going to go long. Yeah, it definitely could start running through here, because then we look for our hourly CAM 1, 2, 3 setup. We got a 3 set up for the hourly. If we blow through this with a big candle, come back, find support at 1, 2, 3, then yeah. Right now we're bullish. We're not bearish anymore. We're not in this downward overall bias for the day. Right now we're in this trend on a 1 minute, and we're bullish. So until we get confirmation that the candles are now reversing in a premium array, which is what we're expecting, we should see a break to the downside, and then it says, okay, I've got my premium array, I'm breaking to the downside, showing you my hand, and away I go from here. Otherwise, we're still bullish. Does that sound clear to you guys? Does it make sense to you? I grew up in an engineer family, and myself was an engineer for a few years. I can say the engineers have a tough time with the uncertainty of the market. Yeah, he wants so much. For him, I said to him, it's algorithm. It's just an algorithm. I could not be this precise in randomness. And I keep going on about fundamentals. He goes, no, fundamentals drive the market. I go, they do not. I said, the trades I just took in Bitcoin have zero to do with any fundamental, any meetings, anything that people are talking about Bitcoin. It was precision. It was algo driven. I saw a precision entry. I took it. And I'm showing you precision entry exits right here on the 1 minute chart as they're happening. So we knew this is not short yet, because we haven't got anything traded below the inversion, because that's an inversion. The moment you fill it, you come back, find some support at it, now you're going higher. Remember I was saying I'd close out my CAM model because it's bopping around here too much? Well, there you go. You would have made a profit. Now you'd be back to break even. Actually, you'd be a little underwater now, and your stop loss is about to get taken. So now if you're in, get out. Because now that is a valid order block, and we're still going long. We validated here with a body, come back, find some support inside this candle here now, and keep going up. So until we break that mean threshold and this candle's, or this inversion here, we're still long. We've run this high. If you're a steadfast CAM2 holder, your stop loss is still sitting up there. If you've got the cojones to hold on to that, bless you for your perseverance, my friends. Do you have video where you explain the CAM setups? Just want to be able to follow along. Yeah, Anthony, you can just go on the channel. You'll find the ThetaWave channel right here. So if I'll pull my channel over here so you can see it right here. Go into videos, right here, videos, and it's this 3 ways to attack a consolidation. It's 29 minutes, and I'll explain you what the CAM models are in here. And it's consolidation attack model. CAM, CAM, consolidation, attack, 3 ways to attack. So CAM 1, 2, 3, they're all in there. You're very welcome, Anthony. You're very welcome, sir. See how we're coming back and find some support on that inversion again? Bang, bang, bang. That's a good sign for long, right? It's finding support here. It's like climbing a mountain, and you get on the ledge and you go, you hang out on that ledge for a bit. You go, all right, now I'm going sideways. And you want to climb up here on top of all this stuff here. How's that? The ladies are going, typical men, and all your little sound effects you men love to make. Have you ever heard a guy ever tell a story that didn't come with sound effects? Come on. Derek probably goes in the kitchen when he's cooking eggs. He's like, he's mimicking the eggs snap, crackling, and popping. His wife's just sitting there rolling her eyes. Can you see how you could be talking yourself out of a trade here? If you're just in a CAM 2 model and you said, look, I'm just going to trust my model. Well, trust it here. Now you're coming back into it multiple times. This may not be the time to trust it anymore. Even though you've got a beautiful equal low sitting down here, this may turn on and just go kabam, take this hole out, follow right back into our bias again. Because right now we're in a consolidation CAM 1 model for a short in the hourly model. Sorry, CAM 2. Let me make this bigger. Let me just take the CAM. Let me show you this model here. Where's our charts? Consolidation. From there to there. We wicked above it. We come back inside it here. If we run all the way up into here, there's a CAM 2 model of that consolidation. You may say, well, Darren, I like this little model right here. I like that. I go, okay. CAM 1 is there, right there. Your stop loss is sitting up there. CAM 2, we just hit your CAM 2 model right there to go short. So now wherever that is on the 1 minute chart is your CAM 2. Shitty candles, I know. You want to wait for a better consolidation? Go for it. I'm just trying to show you how the CAM 1 model works on the hourly. Take it for what it's worth. Remove. Oh, look, aren't you happy you took your CAM model down? That's that trusting of your trusting your model. Even you can see how I talk myself out of that trade. If you trust it, it will come. Now, how do you manage this? Manage this from the back end. So now you broke that, I'd be like slam right up against break even on that. Just because I don't want to, then you start pulling your fib tool from low to high, right here to here. What's our first objective? Look at that old high right here. And what is that? What's this right here? What's that right there? It's a breaker before running these lows. And what does it line up with? Oh my goodness, can we talk precision here for just a moment, ladies and gentlemen? Can we talk about precision? Are we expecting that 50% to get tippy-tappied? Hells yeah. And look, what they're sitting a little consolidation, or a little BISI right in here. A nice little place to come down. Just dip over the 50% into the body and the fair value gap on this side. So look for this little pocket of passion. This is the passion candle, my friends. The passion candle. Here we go. It's a beautiful scent of passion fruit. Breaker. So and this right here would be an exit for me to take a chunk off right there. 50%. And it could run all the way through to these equal lows. I'm all right with that too. If you guys are looking for a big old CAM 2 model smasher, and we're looking for our overall bias again, because now we're biased in the downside. See how we've closed below that? So now I'm bearish. Till proven otherwise, and I'm bearish right there. Now, hourly, you don't know you're bearish yet. Well, you do. You're saying, well, I came back into that balance, that down close candle. Now it's getting short. So if I come back into here, I'm getting short off that. Yeah, I'm all right with that. as a down close candle. That's big parent swing above that big breaker. Hello. We want to see this candle we want to see a wick get below here now. Validate this as an order block. Otherwise, fair value gap, return to order block low. Come on down to 50%. And you'll see the value of cam 1 and cam 2. $10.42 breaker. 10.42 breaker, he says. 10.42 breaker. 10.42 breaker. Where's the 10.42 breaker? 10.42. 10.42. 10.42. This guy here. I don't know if that's a breaker. Last up, down, close candle before run above. Yeah, these guys are all inside it. Yeah, I'll go with that. Yeah, good call. Last down, close candle before run above old highs. They all got taken out on that swing up. Yep, I could say that would be a breaker. We've come right back inside it. Inversion. See how the inversion now finds support? That's a short right there. Also, the new cam 1. Consolidation, break below it, come back up, cam 1 entry for a short. So cam 1, cam 2 would be, oh, let's really chop this up here because I can see all three of them here. You see all three? So you've got so we're just looking for this old high here for that, just so you know. So cam 1's right here. You've got entered into there. Also off that. So if you're doing a cam 1 and you want a precise entry, put it right off that inversion right there. Go short, which is exactly what we should be doing. I'm going to go in a little late. We're back to the order block, so I probably got in very late. Stop has to go up here. But we could run back into that one more time for a cam 2 entry, and then the leg that takes out the high, which is that guy there, 50% of that is, oh, right there. I'll put another order right there. And I'll put a stop loss right up there if I'm wrong. This will dollar cost average this right back into that range there somewhere. So premium discount arrays, I've just keyed off of this, so it was pretty silly to enter in there right off the order block. So I'm expecting it to run back up into a premium here, not in a discount. If it stays there, then I lucked out. I literally chased price and I lucked out. Not a good entry there, just so you know. So now we've got this off of here. I expect to see this keep coming down lower now. And if we do get a run up in here one more time, and we do get a Model 3 entry, a Cam 3, looking at 50% of this, and then I look for, there's the leg that takes out the high right there, and look where 50% puts us, right on that little inversion right there. So I'm going to put my candle right on that, and I expect that to hold. So this time, let's just trust the cam models for what they are, and if they lose, then we'll know why, because a premium array will close above the premium array and will continue pushing higher. So there's the cam 2 model. And here's the problem when you have a discount array and a premium array in the same range, and they got a midpoint one, which is sitting right in here. You go, well, Darren, you say if it trades above it, then I'm long. Yeah, I guess technically, but when you're inside the range, look for like arrays. Like array to like array. So I expect to see that run up and pop me in, and then I want to see it turn around and come back down. If it closes above this 50%, I'm out of the trade. That's my fail safe right there. Or my fail safe's up there, but my stop loss is going to be on the close of that candle if it doesn't get taken out first. You'll hear me do this. It's a rinse and repeat exit strategy over and over and over again. So we just ran up into mean threshold, cam 2. If it rolls over here and comes all the way down now, I'm all right with that. I get a feeling they're not going to leave that untouched. I think they're going to run up and just tippy tap it, grab it, and put it in. And it's okay to be wrong, folks. Just wait for your the proof. If the 50% fails, that's my rule for a CAM 3 failure. If I close above the 50% rule, I'm wrong. And I'll allow that right there to be my closing point. Stop loss is really tight, so they can still run me out, hit my fail safe before my thing. But here's that little tippy tap I want to see. Just come up and tap me right there. Sometimes it'll come up and get me. That'd be hilarious if we're too damn accurate. Your precision is too much. Lauriston took the short. Well done. Could not work out, but that's how is trader risk management. Thanks. EJJ, my man. Good morning, good morning. Good morning, Cody. 49 people watching. Nice, man. Nice. We are growing, my friend. Yes, indeed. We are growing. Oh, the CAM model is working. Look at that level of precision. I could have come down just a little tippy tapping more. Sometimes you can be too precise, people. Yeah, it may come back still. So we've got this order. I got to get through this order block and then go, okay. Our CAM 1, CAM 2, CAM 3. If all CAM 3 model people are in this, again, that's where you better have been. You're more likely to have me jumping in a little too early like that. Look at the precision you could have had there for a CAM 2 model. You wouldn't have quite got your CAM 3, but you definitely would have got your CAM 2 and CAM 1. And you're running for lows, take out a little bit of here, or you're running to our objective, which is the breaker, which is 50% of that range that we're looking at here. So if you want to get a quick little run on your cash, move to the sidelines, wait for another setup. People, this happens all the freaking time. So thinking that you want to run down to these double lows, great. That's what your objective is. Manage it from the back end, exactly the way I've been telling you or showing you on these inversions, because now we're short, right? These are holding price. We've closed below, come back up, find some support, get down, keep going down. Manage it from the back end now, or do a front end trade. If your entry was here, that's 24 down to here. That's 15 handles right there. But I think it's coming here. There's 20 handles right there if you come back to the breaker. Oh, can you feel the love, my friends? Can you feel the love? I bet you're all loving CAM 3 now, hey? CAM 2? Rishu, Message is retracted. Dave Barry, I have to step away for a few minutes. I will be on later. Thank you so much. And wonderful to be part of the group. Dave, I am happy you're here, my friend. Congratulations. I'm happy you're here. Bro, you know your model is going to go to the on for generations, LOL. Yeah. Your cam model. Yeah, it's lovely, isn't it? Laurie, go wash some dishes. Yeah, get out of here, Laurie. Go wash some dishes, buddy. On us 100 here in Europe, we are already in that breaker, kind of your chart late. Yeah, I jumped on that sucker way too late in here. I got it in my live one. I waited for a cam 2 entry, but the this demonstration was kind of a poor example of what you should and shouldn't do. So I'm going to delete this one now because cam 3 is done. Didn't quite, like, it literally touched me and I didn't get it. So now I'll keep this stop loss here above this model here. I want to manage it here. So now I'm gonna look for a low here because I'm in it kind of late. So I want to try and eat through this. I remember our overall objective for the day is still down. So we've just come back into a cam 1 model on an hourly. We've tapped it. We want to start seeing it really blow through this candle here now. Really get down into the rejection block and then start digging into here. That would make me happy. So let's let's manage this now from the back end. But first, there's a message from our sponsors. I need to go for a pee. I'll be back shortly. It'll start running. I'm going for a pee. It runs when I pee. So we don't want to see it get above here. Yeah, mine got taken as well, and I got back in right away just because I like this area providing support. So my live trade, I came back, took my stop, and then I got back in again. Oh my God! I'm going to show you why it hit that spot. Why did it hit that spot there and not that spot there? Can you guys see? Tell me the candle that I'm going to show you here. You tell me the time and then I'll show you the one. Let me just see in the comment section on the side here, which candle is this keying off of? That high right there. What's it keying off of? Give me the number. Cherish Lovey. Cherish Lovey. I love that name. Cherish Lovey. I love the love in the love. Thank you all. I'll be going over to your video to study. Small inversion. Yes. Where is it? Where is the small inversion? Come on, Cody. Come on, give it to me, brother. 10:59. Yes. Cody gets the prize. Right there. Stretch it out. See that right inside there? Bam! Right on it. Left. I looked at that, was like, ooh, better get short right there. That's a good little inversion. Good eye, Cody. Good eye, buddy. Well done, well done. Didn't hit this, hit that. Like a ray, so technically we could be getting out here at the breaker, but I still want to see this get a little deeper. See that right to the midpoint of that breaker? That's awesome. So now this is, when I talk about padding, when you get a trade and you want to develop some padding in the right direction, you want to see these inversions hold and your order blocks, trade through them and tap early on them. Not all the way back here, but just tap on it early and then get out of there. And we want to see this guy get eaten through. So then look for this inversion and this inversion to hold price. Inversion, order block. See how the body trades above it. Right here, body trades above it, tap down, start looking for long. So we don't want to see it get above the mean threshold of this. We want to see this one actually, sorry. We want to see it trade off of this and start coming back in here. We're in a tight consolidation right now. We're getting beat up, but I want to hold this for a little short. I think I want to hold this short for the day. And my little reminder. See See how the breaker's holding price? Mean threshold, we're snapping on it. So I want to see this order block. I don't want to see it keep getting revisited. Cody says, I can only see inversions. My eyes are inversions. That's it. And that's what you do. You know, you could literally look at the inversion as the pivot point for when the market's moving in different directions. That'll be your pivot point. Like we've closed above this one now. But I'm going to hold on to that just because I want to see if it actually closes below it. We've already closed above it, so not a good sign. I want to see it climb it. So if we can't get through this breaker here. If we get through the breaker to the other side, then this is the next breaker we want to get through. So they're overlapping right now. So, but it's in a big discount, and we've already tapped the discount. So if this is going to go rocketing back up again, this would be a perfectly nice place to do it. And we've already got proof that we're starting to go bullish now, right here. That is not bearish, that is bullish, because we've now closed a candle above. We're in the middle of it. So technically I'm going to follow my rules. I'm going to get out and wait for a setup to prove that I'm in that. I'm going to take out my live trade here too. I'm going to wait now, because I've been preaching to you guys about it doesn't matter if you make a couple of pips. There's always another setup, man. If this just goes whappo straight down, okay, big deal. That whappo will happen. El whappo will happen many, many times. My friend Victor, El Guapo. What is El Guapo? I hear about El Guapo in some of the movies, but I have no idea what it is. Back to this little inversion. I'll wait. We're consolidated between that candle and that candle, so wait for my breakout. If we get a run back up into here and finally get my little tippy tappy that I'm looking for. So those of you who are in cam 1, cam 2, there's your first exit right there. You take it right there. That's worth how many handles? This 09 to 26. So almost 20 handles. See where I got out? What's in my rule? I'm happy when my rules work, man. And you see that slammer up like that? So I got to bank some cash, and now I'm underwater. So now here's where I want to be. I'm going to go back to my original want. So short. I'll put my stop loss right up. They're equal highs, right? So chances are they may take them. We're back into cam 2. You cam 2 people who cashed out right here are now going cam 2 again. Do I get to cash out here, here, and here? I'll tell you, these cam models, I tell you, they're beautiful. They're little bits of poetry. If you can see them and you can trust them, there's where, how many of you, out of all 45 of you that are in here right now, how many people actually trusted your cam models and said, I'm taking it anyway? Right? Because now you're about to collect. You're about to collect. Back to a discount array, you'd be happy with that. Doesn't have to be the low, could be just the order block inversion right here. You tap it, you're out there. Welcome to another 20 handles. You've scooped 40 handles out of this while everybody else is waiting for their setup to start. Cam models. I tell you, they are lovely. This is sniping at its best. This is truly what sniping's all about. When you can snipe 10, 15, like Michael says, you get 10 handles out of this, you're good. You're in a consolidation, a mess like this where you don't know where it's going up or continuing on the downside. You're sniping out of here, man. You just keep collecting 10, 20 handles at a time with logical entry and exit points from premiums and discounts. If this doesn't prove to you that ICT has taught you a level of skill that you can utilize right down to price action happening on a 1 minute chart, hitting array after array after array after array with absolute precision, if you can't see that, how well it works in the trenches on the minute by minute chart, it shows you that his system is freaking rock solid. You see how many people are out there trading a 1 minute chart using principles that are proving themselves every minute. We are proving his skill set, his ICT skills. They showed you. They're not bullshit. They are solid, man. And your Cam 2 just paid you right there. Right off the breaker again. If you use the breaker as your exit, again, whatever you want to set as your exit point, you go right ahead. Some people are going, screw that. Cam 2 is going for the double lows, man. Okay, what's your plan? How do you back that up? When does that plan for the double lows fail? Don't marry it. You can take it on a date. You can say, hey, sweet sister, I'll take you on a date. Not your sister, but you know what I mean. But, you know, on a date and say, hey, look, my destination is the restaurant down the road. If you get stopped along the road, thought, no, this is going to turn X-rated here. Stop. Forget that whole analogy. You're just looking for this candle now. This is reprice, rebalance. So this is considered an open candle. So fair value gap, come back up inside it. Right there. There's your fair value gap. Tippy tappy inside. There you go. Now go down. Or you can come back up into the top of it. Inversion right here. Those of you who want your cam models, if you loaded in or you got out right there, you're laughing, man, because it's coming back into a premium array. So take this guy here now and stick it right there. Mean threshold. See that snap on there? Ooh. Snap. Okay, so we're through. So wait, now you got to think, where does it fail? Where does your rule fail? I bet you're happy now that you scaled out something down here and we're back into a premium array. Get back inside that guy one more time. This is a Cam 1 entry about to hit. Look at all these Cam 2s and Cam 1s that we're hitting and delivering. Delivering off of discount arrays. Discount arrays. Full swing points. Snap off of it. Snap out of it. Remember when Cher did that in the movie? Don't know why it popped into my mind. I think it was Star something or other. She slaps the guy in the face. Snap out of it. Right there. There's your Cher play right there. And you come all the way back up to a premium array inside your order block. Your inversion's holding price, and away we go. Ladies and gentlemen, welcome to ICT. This is IT on steroids. This is IT running in a Formula One car. This is ICT fueling your trading. Right? Do you see that? I hope you see that. You guys are in an F1 car now. And you're reading price action to support your trade model. Now those Cam 2s just unloaded here. If you unloaded there and you got back into the premium right here, you're like, I'll take it. Getting short. You're collecting inside here. Again, you got to be super fly with your fly. Is that the word for it? Fly means you dress snappy, right? I'm 58. I'm trying to stay hip. Derek and Abs remember the big old days when we used to say hip. You got to be hip to be square. Yeah, anyway, back to the order block. Run down. We've already hit the lows, so look for a swing here. And again, every time a new swing point occurs, and what time are we at? 26, 27, so we're expecting a swing point to occur in the next couple of minutes. We have a 2-7, followed by a 3132. And look for another run back up in here. This, I like this up here still. Don't count me out, my little sell order. El guapo means handsome. Is that right, Victor? Significant news events this week. CAD. Notice I started saying that like a radio announcer. Significant news event this week. CAD international rate announcement on Wednesday. EU international rate announcement on Thursday. US NFP on Friday. So my expectations aren't for much today or tomorrow. There's clouds in the air. Derek's like, there's clouds in the air, followed by sudden gusts of wind and rain showers. Put your Speedo back in the closet. Thinking the same, Derek Campbell. Stopped out at, that'll be twice, short movements. Ay, oy, oy. Robert Vasquez. Where's the carrot? Oh yeah, we have the carrot. I knew it. I knew eventually you guys would be hooked on the carrot. You're all a bunch of vegetarians. All right, where do we want it to go? Does everybody want the, we're all looking for the discount array today? All right, let's get the carrot out. Maybe we got to give it a little sample. You can have a little nibble first. There you go, sample, sample, sample. Oh, that's funny. Was tempted to enter a short on the inversion. Price action, two suspect. I'm done trading for today. Smart guy, Lori. Inversions and thank you, mean. Yes. It is a guapo. It is handsome. I'm going to go sideways with the carrot because I'm still looking for down. This is definitely bearish overall. This could be a conso in our Crazy Ivan. Run back up for a dip down. Get ready for your Crazy Ivan. They're like, Crazy Ivan? Who is this Crazy Ivan fellow? Just looking for a way to get some golf in today. 70 degrees in PA. Oh, wow. 70 degrees. Go for it, man. Sounds like a great golf day. This is getting all bashed up. It's a Monday. We don't stay in the markets too much. This may not be a big celebratory week right now to get in because we got non-farm payroll on Friday. We got some news events Derek was kindly enough to let us know about. So this is fun though, you guys. If you're leaving quick, that's fine. You know, do your own thing. But this is where you really start to understand price action. When you're marred down in all this crap, staying focused, getting that theta wave mindset, my friends. Staying focused on your objective, focused on each candle, watching each candle form, cross-referencing them constantly. If you do this over and over and over again in the middle of a 1 minute chart, you will start to get so good at seeing ranges, order blocks, breakers, senior arrays, discount arrays, blah, blah, blah. You'll see them so clean that it will literally affect the quality of your entry and exits. Your trades will get way, way, way better. Okay, I'm giving up hope on my little inversion. it tapped it right here. Literally tapped me here, did not get me in. It was probably just that little tiny spread that separated us. Okay, so now we're eating through the breaker, which is good. I want to see that. We're eating through the mean threshold right there. I love that. So now we can say bye-bye breaker. Even though it can be used now as support on the downside to go through. Keep an eye on this guy here now. We want to see this inversion give way. And the carrot, we shall put the carrot down here. We're continuing on the downside. So you see how that cam 2 model, multiple times your cam 2 models holding cam 1 one more time. And these are all there's 32. $32 to $36 is our crazy Ivan. We should see anywhere from 32 to 38. You should see a return back up into look into an area of support. This right here, I would take that guy right there. Remember I said this candle here, ignore that wick. That becomes the fair value gap. Come back up, fill it, come back up, tap it, and leave. Go to your ICT index and look up reprice rebalance. And that will explain what that is. Here we go. All you people who are short are just going, yes, I should. I'm glad I trusted my cam models. Blessed are the cam models. Look at that. Come back through it, tap it, and head on through. So now, see on the hourly, you don't know where you're bullish or bearish. You're guessing because it's gone on the way down, but there's nothing really solid in there. But do we see this change? Do we see this change here? Do we trade above this inversion? No, we're bearish. Have we got anything that broke to the upside through a premium array to go higher? Yeah, this guy here, we got a candle above. It just went to a premium array, followed back down. Order block, again, different order blocks, bounces off of them, back up into a premium array again, into this inversion, wicks through it, into the middle of our cam 2 entry, inversion, trade below it, came back up inside it. Now we're short. We're short right there. You didn't know that up here in the hourly, daily, weekly. You guys have no idea, right? But now when you see ICT on steroids, you see it in a Formula 1 race car. It's jet fuel, man. It's jet fuel when you can read the price action like that. Now you've got to develop. See, I'm showing you some really clean stuff here, but do you notice what we're dealing with? Because a lot of you are saying, well, why aren't you trading that? We are doing stage 2 ICT, developing the mental mindset, developing trust in your algorithm and trust in the ICT principles. And unfortunately, we need to see it, me, 1,000 times over, because all the times that I traded this badly and wrong and live when I shouldn't have traded live has built a wicked psychological barrier to try and get through. And even though I'm calling it, trusting yourself to take the trade, especially in front of you guys too, I got the added benefit of humiliating myself in public. But you really, once you trust these arrays and just say, look, I don't care. If it goes there, I'm only risking 1% in this trade anyway. No different than you would any other trade. At least now you've got something that seems like a pretty solid setup that you can count on. As you can see multiple times, you can count on it to pay you dividends if you set your sell trades properly. If you're just going here for a cam 2 model and you're still waiting for this to happen, yeah, you weathered all that, but you don't care. Your stop loss is still sitting there. You went for lunch, you come back now and you're going to like, oh yeah, put the carrot down there. It's after the carrot. It's going to take my lows now. I finally got my entry. That one paid you, what, $2,000, whatever you put in there. You've made your weekly salary right there because you trusted your cam 1 model or your cam 2 model, even if you took a cam 1. put a stop loss up there with a 1% risk on your account and went there. You're doing okay. If you like what we're doing, give it a thumbs up, folks. Just to give me an idea that you like what we're doing. Just give it a thumb, a like. Tell your friends. Do your friends a favor. Tell them, hey, look, I want to share something with you. Tell them to pop into the channel and pass this forward. Pay it forward, man. Either teach them yourself or tell them to come here, and we'll show them how to do it. See the rejection block? You'll hear me talk about rejection blocks over and over again. Pay the trader at rejection blocks because you don't always get your damn low. Now wait for a premium array so you can get short on that again, even if it's inside here. So now, if you get short right there and you say, if it trades above that, and I'm already in a premium, if it trades above that on a close, I'm wrong. And then you do the same rule that I've showed you over and over and over again about how do I get out of here? My stop loss is up here. Well, how do I get out before it gets to that? Well, if it closes above this, if it comes back, then I get out and I wait. If it doesn't, if it closes below it, then I've just got my entry right in off tight off that inversion. And it should start going back down, but we're up into a lows inversion up here, right over here. We got 2 seconds. See, now it closed up. Now I'd be out right there because it popped down. You want it to keep coming down. So the moment it popped back up again, I'd be out. And my loss would not be up there. It would be from there to there. Small little loss. See how you can cut back on, if you see it going all the way back up there, you'll go, damn, that's a good idea to get out there. But I'm getting in at as laser focused as I can with precision. And if it fails on a close, then I'm out. As soon as it pops back, if it breaks through that again, that's my rule. If it pops through that opening again, it ran down here, good. As soon as it popped back up, I'm out. Even if it goes pop halfway there and then drives out, that's my rule. I'm not going to play silly buggers with it and chase it up and down, up and down. It's open is my decision to pull the trigger on a close. If it's running back down, I won't pull my fingers on the trigger, and the moment it taps that, gets me back to my break even, I'm out. Wait for a new setup. I'm going to take off. Thanks for your time today. You're welcome, Wilson. Cody, would be nice to go up first for equal highs and then sell to take the low. That's also possible. Even if we took the highs, we will be bearish. We can also take the low and go up for the highs and sell off again into the volume imbalance. Yep. We have a so now we're bullish. We want to see this inversion hold or a discount array in this range. Discount first, then go higher. You want to see this one hold. It's okay to go through here, come back. If it finds support at that and keeps going, that's fine too. Even right here. We have not taken out a low, so I wouldn't go super bullish on this. If we'd taken out a low and this kind of thing's happening, I would be going long on that, just for an immediate high. Lori's into the 10-second chart. Good for you, man. Price reacted really aggressively on the rejection carrot. Right off that rejection carrot. So consolidation. See all these overlapping consolidations? So you could say, again, where you draw your consolidation is entirely up to you. You could say your consolidation is from there to there, or you could say your consolidation is from here to here. A little consolidation for the breakdown, come back up inside the consolidation, run back down. Now, this is not a clean consolidation, so it's definitely open to interpretation, obviously. As you know, when you're looking at consolidations like this, they're way more cleaner, right? So they're probably better ones to play with than trying to make something out of here. Even if you incorporated all of this, this would be like from up there to down there. That whole consolidation area right here, all the way across. Midpoint would be right up in here, inside that inversion one more time, right here. See that swing point? All those places you should be paying the trader. All those are PD arrays that you should be thinking about paying yourself. Again, whatever your strategy is, have your strategy for your discount array. Don't always put it at a low. Either manage the back end of it and say, as long as I'm staying below that inversion, the moment I come above that inversion, I'm out. My trade is done. So right there, there's a little tiny guy that you popped above it. As soon as it closes and comes back through, you're out. Your trade is done from there to there. You didn't get all of that, or you say, every time I hit a rejection block, I'm taking a piece off, and if I hit the low, all the better. Alex, good morning. I remember you now from way back when. Good morning, Alex. Oh yeah, I've taken a few trades today. I want this to come to my entry point first. Forgot to ask, how's your funded account going? Anything for gas at least? They're both still going good. Nothing, no major stuff, because I'm very reluctant to go live unless I see something really good. And when I do it, I just put so low a leverage on there, it just comes back as nickels on here. If I was trading like here on my funded accounts, oh man, I'd be like smashing it. Be smashing it. But you know, when it comes to live money, you got all the psychological stuff in live money as well. But the more I practice in here, the more I start showing you this stuff is solid. My funded account grows, your funded account grows, or your demo account grows, whatever your thing is. But thanks for asking, Cody. Sorry, could you clarify what you mean when you say manage the front and back end? Not clear what that means. Okay, so front end, Vittorio, is, let's say this is my trade here, right? This is a front end management. So front end means I'm managing the front of the bus. So this is driving in a direction. So you're steering the bus. You've given a direction, a bus stop. So that's a front end management. So you give it a destination, you mark it, you move away, you walk out, you go shopping, you go golfing or whatever, but you put your trade on and you ignore it. So you have no management of your trade. That's a front end trade. A back end trade. Now this is not a Michaelism. Okay, it's a Darrenism. The back end trade is managing. So what we've been doing today is once we enter into a trade, we're looking for how do you manage the back end. So you're following it down so that it's driving ahead of you. You're managing it from behind here, saying, if it comes back against me, I'm out. So I'm managing the stop loss on the back side as the front of the bus is driving for our take profits. The sell side is what we're managing, and that is your rule for failure has to be the back end. So in other words, when you're driving down and it breaks a specific point, like this, let's say, for example, right here, if that's my entry, if we break this point on the downside and come back up, find some support at it, I will move my stop loss to here because this should hold price. If it trades back above it with a close and then comes back down and taps it, I'm out. That trade is done there. I've managed it. That's my fail safe or my stop loss. My fail safe is up there if it rips back through me. That's not a stop loss. It's a fail safe. You should have your stop loss constantly moving in your mind because you're managing the back end of it. That's what I mean by that. Hopefully that's a little clearer for you, Vittorio. Good. You understand. Perfect. So when you're looking at your trade now, I'm looking at saying, okay, well, I want to enter in here, for example, right now. I want to enter because it's in a premium of the range. There's an inversion there. There's a fair value gap inversion here. So I want to see my entry is going to be inside that, and I want to make sure it's supported by this. So I've already got my back end. My stop loss is up there. That's for a rip through. It's my fail safe. My stop loss will be right here. When I go into this trade, if a body closes above it and I come back and tap it, I'm out with that little loss right there. That's my true stop loss. That's my fail safe. I'm going to manage this from the back end right off the bat. And I have an objective. So I have a bus stop and I'm going to manage it from the back end if it fails, long before my stop loss gets hit. And those of you who are into brokerage firms, you put your stop loss up here, your broker sees that. If that's where they're allowed to open their spread and they can't get to you because it's way up there, your stop loss is sitting right here. You'll know if they're taking a run on your account. Michael used to talk about brokers will take a run on your account all the time, especially if you start getting profitable. They open up their spreads and take you out. So there's your stop loss that you see. That's the stop loss they see. That's a fail safe. They never get you full load. They get you in a little piece here, and they don't know that. Well, they do now because they're listening. They're all listening to you, people. They are all listening to you. So what do we got forming right here? This looks like one of those delicious little cam models about to set itself up. Do you not think? Do you see deliciousness? I see a serving of cam model 1 and 2 here. I don't see a 3 yet. I certainly see a 2. Now what would be lovely is if we have a cam model 3 that comes, rips up here, grabs me, runs back in, comes back up, cam 1, 2, 3, and I'm already up here at the premium. Wouldn't that be good? So see how I'm kind of thinking about where I'd like to see that form? If you see it enough times, you say, okay, there's a cam 1, 2 forming here right now. I don't care what it does from here. So those people who are sweating this, saying, which way is it going to go? Which way is it going to go? Well, look, you're in the middle of this whole range. You're in equilibrium here. It's either going to go up, come back, tap it, and run, or it's either going to go expand to the downside, come back up, tap it, and go. And it can tap it in 1, 2, 3 places if that runs high first. Now the objective is I don't want to see it run higher and then higher through this, but I've got my fail-safe right here, my stop loss. Fail-safe there, stop loss here. Equal highs, run those out, come back into this guy here, and get short. Get shorty! And I'm going to get short in my live account here too, because I like this one. Come on, trip me in here. Little carrot. Let me give you a little carrot right there. So you just come up and grab it. It's like, what are we selling? The carrots are so cheap this day. Come on, you know you want the carrot. Take the carrot. Oh, which video? Okay, it's right. I'll show you again. Those of you who are new to the show, go into the ThetaWaveTrader site. You'll see this one says 3 ways to attack a consolidation right here. That's the CAM models. Consolidation attack model 3. 1, 2, 3. They're all in here. Again, it's not mine. It's Michael's. I have just renamed it because he didn't call it a name, so I call it the consolidation attack models 1, 2, and 3. Okay, so it has eaten my carrot. Now I shall move my carrot here to tempt his tummy. Come on, senor. Oh, my friends, can you feel the love? Tap that and come on down for the carrot. Come for the love, my friends. So if we take this low here, I'll slam this to break even. Because I've only got one lot on this, so I can't take partials. But I like to see this whole thing hold price right now. I don't want to see a revisit of the old cam stuff way up here anymore. That needs to hold price. If we have a body that trades above it, that's my fail-safe. I'm getting out. and you got to follow the rule. Wicks can do the damage. The wicks are just, the damage is potentially the whip up there and take this lot out, then come back into the range, which is fine. Then you just go, okay, I got taken out. I will turn around, and once it gets back on that other side of it, I'll get short on it again, because now it's just ran up to grab liquidity, which is the fear when you see equal highs like this, and that little inversion up there. Still keep your eye on that little puppy up there. So again, I want to see this thing close below that. See how it wicked up? I'm going to see it close below, and it does. I don't want to see it keep climbing like that. No. I don't want to see it revisit that high. Oh, I'm so close to getting rid of that. So close. We'll see how it closes. Tapping this. If it starts to run back through that high again, then I'll close it out, because that's not a good sign. Again, that's just my thing. I'm out. That's going higher. See it closed above. Now I'd be desperate trying to get back out here. So there, see how it's starting to close down? If it closes through that now and you want to get out right as it comes. If it comes there, out. It just tapped the high, get out. That was your run back to your opening. That's why when you put that stop loss there, or your entry in right with precision there, if it fails, you can get out right there. And this is the one where it pops above me here, and okay, I'm out. If it runs through this now, I'm okay. If it comes back into it, then there's your opportunity to get short again. And the stop loss was saved. If it comes up there now, the stop loss was saved right there in that wick. You closed above, opened, traded all the way back in, gave you an opportunity to get out. It went pop above it again, and then came back down, and then went through it. Well, that was my rule. Unfortunately, it tippy-tapped me and took me out, but it would have come back and given me a nice little break even. That's how you look for price is still going bullish. Right there. Give you an opportunity. It's the grace period right there. Get out. I'm going long. I'll give you one opportunity to get out. If you don't take it, I'm going to take you to your stop loss. Or if I'm generous, maybe I'll come back and tap you one more time. Say, guess what? I'm going to go higher. I'm going to rejection block or higher. And there's some equal highs up here. I'm back into a Cam 2 model. There's a Cam 1. Cam 1, Cam 2, paid dividends. Paid dividends again. Paid dividends, both of those paid dividends again. Revisit the bottom of it, that inversion or that consolidation one more time. Now, if it runs through this, that's another Cam 1 model. Scrambled eggs time here in Pennsylvania. I haven't had any scrambled eggs. I might as well just be fasting every morning with you guys. It's lunchtime in New York, and it's 10 o'clock here in Canada. I'm okay with the fact that I got taken out with my rule and it went against me. That's all right. I'm okay with that. Let's see where this closes. If it comes back there, you could get back on side again and say we potentially have more downside, but it has to be a big, bold candle, come back up with the next one, and get short on it. There you go. So then you can get short right there. done. If you don't get it, you don't get it. You're aiming for here, 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 discount array, down here. I do like this one. Stop loss will go right up there. It's a lunchtime macro, no. Oh, double two. That's a 2. Then we got a 5-7. This should come around, run up. We should run up in there, make a high, and then start coming back down again. That volume imbalance way up here, you mean? That little guy? Yeah, I like that guy. That would have taken me in. I moved up my stop a little higher because I want to get close to it. If I'm wrong, I want to be able to get out again before I reach my stop loss. Or you could get super picky and say, I want right there. If I get that, then my stop loss is even smaller. If it takes me out, I don't care because I do like that piece up there. I'll cut it really tight. So if I get it in here and I go short, then that'll be, I caught a magic number there. So unless you have a 3-point entry, 1, 2, 3, stop loss, all 3 of them go up there. You would be on 1 of them, 2 of them, 3 of them. I like to layer them sometimes too. You'll see me drop 3 trades in there, but not in this kind of messy day. It's 1 a.m. in Singapore. Vittorio, my goodness. Thank you for staying up so late, my friend. Wow. You got some dedication. We appreciate you hanging out here at 1 o'clock in the morning, man. It's hard to stay mentally focused after a long day. So thank you for sticking around. How good do you want to become reading this price? You don't want to, how good I want to get? I want to be able to go buy, sell, buy, sell, buy, sell, buy, sell. Just because you're bored and you want to go array to array to array to array to array and just keep buying and selling and buying and selling in a little range and say, I just want to make $1,000 today and I want to go for lunch with my girl, so I'm going to make $1,000. Bing, 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 bing. There's $1,000. I'm out. Go enjoy your life. Don't obsess over candles. You get so good at reading it, you want to just go in and snatch $1,000 out because you want to take your girl on a lunch date in Paris. I'm going to make $5,000, make $5,000. You see there's a homeless guy down the street and you think, and you've sat down and had coffee with him and just chatted about some stuff. And he tells you one of his dreams is he'd like to own his own hot dog stand or something. You go, oh, I'm buying my boy a hot dog stand today. And you make $10,000. You buy him a hot dog stand. You walk up to him. You have it all filled with hot dogs. You go, hey buddy, remember your dream? Here you go. Here's your license to sell hot dogs. It's yours. The first round is on me. You walk away and watch him smile and say, your dream, go for it, man. Come in here, sell a few candles, make your money. You paid it forward. You changed someone's life in a dramatic way. And what did you do? You come in here and wrote the candles for a few minutes because you know how to read price. You did. To me, I get more value out of that than buying a damn hot dog. Ooh, a light bulb just went up. Justin, but you're a great person. Well, thank you. I think I've got, it comes from a life of service in a profession where all I want to do is help people. Paramedic firefighter for 30 years. All I want to do is help people. Walk your talk, live your love, man. Help people out, pay it forward. There's nothing greater than to see the life come back in someone's eyes. I've been very, very, very blessed to have that happen a couple of times in my career. And, you know, saving someone's life, candles, whatever rush you get from candles, doesn't beat it. That is something that will live for you forever. Will live for you forever. To me, it's like saving an animal. I love watching those videos where people are scuba diving and they come across a whale that's like trapped in a net. Man, I'd be, first thing overboard. I'd be like diving in that water. Give me a knife. Let me go. I climb over there, cut that guy free. And there's just something about watching that animal just jumping out of, breaching the water, just going, oh, thank you. I feel so free. And you go, wow, I totally feel for you. Or they swim next to your boat and they look at you like, thank you. Thank you. You're like, ah. I just love those other turtles caught in nets, and man, just want to free things and help them, make things live. I know I'm a sap, but I love it. See now, because we broke that low, my stop loss would be slammed right up against that first entry I had here initially that I took, and then deleted it and moved it up. So that one would be, I'd actually be down right in here, and I'd make that a zero stress trade right now. Because I've got a padding order block, order block, order block. If it starts to run through all of those after taking this low here, that's where you should be scaling out a portion here. And there's a discount array down here, way down there, Mr. Discount, where a little carrot guy is. You've just run that low right there, just by tipping below it. Pay yourself. Now if it runs all the way back up to a premium array, look at this. Premium array, discount array, run all the way up into here, get short, all the way down into discount. Like array to like array, premium to discount. So this may stay intact for attack after we run up one more time into a premium, gather up all the orders who are following below here, and then run them all the way out. Or they just run this hard down through the floor and keep on trucking. I'd like to see that stay intact actually, and then start to run back through this. Give people a false sense that we're going to make another big pound up there. Run in here, turn around, grab that, then run up there and take those guys out. That'd be fun. That is very close to my end goal as well, Darren. Spartanberry. Oh, awesome. Spartanberry, man, my heart. That fills my heart that people want to help other people. That if you can develop, if we can hone these skills here, and we get so good at this, you guys, and you take care of your family. I'm all for take care of your family first, really. If you got to take care of your family, take care of the people you love. And then, but don't forget the people who've got it way worse than you, right? Try and help them out. And if you can do that in here, you say, look, I've got enough money this month. Whatever I make in this next week, I'm gonna find somebody. I'm gonna find a dream out there. Somebody's got a dream, and I want to be able to fulfill it. So even if you say, I'm gonna put a little bank account to the side. I'm gonna take 10% of everything I make. I'm gonna put it in a little bucket. Every time I get a paycheck from my funded account, I'm going to take 10% out of that. And that's one thing I like about religion is some people actually tithe some money or something like that, provided the church uses it for something positive and not just filling their coffers, but actually help people out. I'm all for that, man. Just stick it in a little bank account. Take your 90% for yourself and your family, 10%. When it gets to a nice little puddle, you just say, it's Christmas time. I'm going to go and spend $1,000, $2,000, $10,000. I'm going to fill the food bank. I'm going to do a Mr. Beast. and I'm just gonna go into a store and I'm gonna fill the food bank with canned food and turkey, and I'm gonna make sure people have an awesome Christmas this year, even if it's just being fed, right? Or you go and say, I've just saved up $10,000. Now I'm gonna go to a game store, just like Mr. Beast does. I love that guy. It's a great idea. That's what ideally what I want this to turn into. I want to be able to make so much cash off of doing this that you'll see in my community tab. I'll post videos about this is how you enjoy your money. This is the kind of good stuff you can do with your money. You know, and then go to a video store, buy all the games, then go down to the children's hospital and just give it all away. Just give it all away and watch their faces light up. Go to a clothing store. Clean out a clothing store. See that? With keeping that intact. I said I'd love to see it come back up into here, into a premium. Then come down to a discount. Then run up into here and take this out. Or we've got like array in the premium to like array in the discount. You see that? We have imbalance, Bissy. Here we go. Tappy, right there. Did it get me into the trade? No, my trade's up there a little higher. Because if I'm wrong, again, the body gets through it, comes back, finds some support at it. I'll get out hopefully before I get my stop taken. Now think about this. If I do get tripped in here, where's a good solid place for me to get out at? That breaker right there. Because we know breakers are senior citizens. They're seniors. They're senior array. Those buggers aren't going to let me get in here. It's going to run down. What time is it? 2012. 2. This might be a silver bullet right here. I'm gonna be careful because now I have to close this out now because I've already seen what's potentially to transpire. Unless they trip me in. Leave it there. I think they're gonna trip us in here. I'm going to leave it there. Unless they come back down. If they come back to this guy, I'm not going to close him out. Because see how they're compressing right now? They're going premium to discount. They ran into that array that we were talking about. Now, if they run through here, if they don't come back up one more time and finish this discount array to finish off that last piece of that premium array and then come down and take that out, that's ideally what I'd like to see. Or just run up here, take me in, run through this, and then take these lows. If they don't, if they just come back to here, I'll close out a portion of, I can't close out a portion, I have to close it all out. I'll close out a portion at the breaker. If it runs the lows, then comes back in, creates a fair value gap, and then I want to go for higher, then I'll do that. So you almost anticipate what you want to happen here. And we anticipated this run back into here. When it was here, I was calling for it to come back up there would be ideal. What I wanted to see, well, that happened. That worked out exactly the way we want. Now, you're right in the mean threshold of the inversion. Now, premium discount. What's down here to discount? Breaker, that's all I got. There's a couple of little imbalances and stuff. Is that 50% of the range? From there to there, there's 50% of the range. Will come up there and trip me in. And then it's like back-end management, be super, look at that. This is like being on a first date. You just get a kiss, but you don't get the number. Just gives you a little kiss on the cheek, says bye. But can I get your number? Nope. Okay, come on. Sometimes you can be too precise. Come on, just trip me in, and then we get to watch to see how, yeah, just tapping on it. If this this rolls over now and comes back to here, ladies and gentlemen, there is a time when you can be too precise. And I try to give it a little bit of slack in there for the spread. There we go. Now I'm in. Now we got to watch. I don't want to see this get all the way through this mean threshold of this candle here now. Stop loss is going to go right here. It's closed below. Get out. It's going higher. See? I was wrong. Come back. Give me an opportunity to get out. So instead of $90, I lost 15 bucks. And this mean threshold. So that's where you could say, well, I can allow the mean threshold, because if it turns around and comes all the way back here now, the mean threshold was the line in the sand, and my stop loss was too close, and I talked myself out of it. We're in a consolidation, so here's where you can talk yourself out, folks. What? We got 372 subscribers. We gained a bunch more today. Welcome all you new people. Welcome all you new people. Would you trade during lunch hour? Hey, look, if I see a setup sitting in there, and you can, in a trade out, in the lunch hour, you've got to switch mindset from bomber trades to consolidations. So you've got to switch to consolidation theory, right? You've got to be able to trade consolidations, premium to discount. So if this is the consolidation for the next hour, you got to trade premium to discount. If it runs up and just cleans the top out and starts to come back down, look for a discount array, and you're inside that consolidation. So you're grabbing 5 to 10 handles at a time. If you want that stress, go for it. If you like the odds, they're in your favor, you see a solid setup, and you want to take it, it's entirely up to you. Me personally, I don't trade it live. I certainly might play with it in a demo thing just for practice, but I wouldn't trade it live. Initial entry was precise, LOL. Yep, helping is much better. Hoarding cash just for the sake of it. Makes sense. Life is very short. You know, one thing I've learned about money is you must allow it to flow to you and through you. If you let it flow to you and sticks, it doesn't tend to want to stick around. It doesn't tend to stay with you. It tends to roll off you, and you tend to try to hoard it. But if you just go, you lead with gratitude and love, and you lead with contribution in your heart, more money will come to you. It will flow to you. People, love will flow to you. You demand it, you force it, and it just doesn't seem to. It's like squeezing sand in your hand, man. The harder you squeeze it, the more you lose it. 100% PA is horrendous. Gonna play some Warframe. Be safe, guys. Happy trading. See you, Laurie. Take care, buddy. Vittorio, have you studied with ICT before the 2016 mentorship? Nope. No, I knew nothing about ICT. I knew nothing about Forex. I didn't even know what it stood for. I thought cable and fiber, where I had to get cable. I had to go get TV cable for some reason, and I had to get more fiber in my diet. Honestly, that's what I thought. Oh, he's talking about fiber. I have to get more fiber in my diet? I didn't have any. I was as green can be. I was a seed that was being put in the ground. It was an ICT seed in the dirt. And I watered it with my own tears. You have studied ICT before, mentorship. I was introduced to ICT by Chris Laurie. Oh, good for you. I know Chris Laurie and ICT, they were having a slight little tete-a-tete back in the day, but you know, they weren't mean with each other, and I think ICT respects Chris Laurie because he's at least putting it out there, trying to, you know, teach people live. I think it's great. Another great North gold Olympic medalist. 3-minute inversion worked nice. Good. If you're trading on a 3-minute chart, you're light years ahead of me, my friend. There's your inversion. So see how this body went above it? You come back into it. There's an inversion right here. You trade into it, pop up above. Now you're looking for a run for those highs. Again, small little 10, 19. There's actually 20 handles. That's just 10 handles right there, just from that one trade to there. If you're a 10 handle trader, move to the sidelines. I know a guy who built an entire funded account nibbling like that. Kevin, one of our guys, he was with me right when I first started. And Kevin was trading, he had only been with ICT for 4 months, and he managed in 2 months to get a funded account by nibbling. Just taking that, aiming for that, I'm out. And he'd wait for tomorrow, do that one trade, and he'd be done. He would look for a silver bullet entry that would get him to the nearest high or 10 handles, and he'd be out. It took him 2 months, and he got himself a funded account. So it's doable. It's anything when you start reaching for 10 PD arrays above you, and you wonder why it didn't work, it's because you reached for 10 PD arrays above you. You did not watch price action when it finally popped below you and took you out and changed direction. You did not recognize the market structure shift. This was the market structure shift. This wasn't just a retracement back in here to get short. The shift occurred right there when we blew through it, came back inside it, found support at this one, got up above it again, and away you went. We're now cleared out the old high here. We're back into cam 2 almost. I'm looking here. Keep your eye right here. We're going to put a little happy face right there. You can chuckle to yourself if this one goes right here. We'll turn our carrot sideways because that is definitely not where price is going right now. I do like the idea, possibly. Do you guys see it? Just enough to take out those highs. Right around 1 o'clock. Takes out the highs that occurred around 10 o'clock, 11 o'clock, takes out those highs, and we continue to run back into our array for the rest of the day. So keep your powder dry, folks, because I think that's what we're doing. I think we're running up here, taking these highs, come back into an order block or whatever. Probably an order block down in here. Run through this. Look for this price leg to continue to finish off around in here. Or if we run all the way back up to the open, then we might see a little run above those old highs right there as well. And then a reversal. So we're looking for the big reversal pattern. This is exciting. This is exciting. Keep your powder dry, people. I can feel that there's going to be a big Casmashio coming all the way down into here. That is a Darrenism, a Casmashio. I don't know where it comes from. It's exciting. I see potential coming up here, folks. I like this high. I like these highs. That would be nice to see that. Just boom, fair value gap. Right below it, came back up into it, and then we're out of here. My coffee's kicking in. I gotta go back to the bathroom. I'll be right back. Dow took out the high. Oh, nice. Very nice. See, really awesome entry right here off this candle for a long. There, re-entry here. That's the only awesome trade I could see that was doable for me anyway on that Dow. So I'm glad you got something out of that, Derek. Good for you, man. Oh, looky. It hit our little magic spot. Does that not excite you, my friends? Does that not impress upon you the power of those little inversions? I hope you got short on that there, Cody. All right, so like array to like array. So here's our setup. Bugger's not going to get me in. Should have just left that already. Should have. See how you judge yourself after the fact? Should have left that sell order that was sitting up there for a couple hours already. Finally hit it. Would have been a perfect entry for cash out here, cash out here, cash out here. Now I'd like to see it come back, revisit this one more time before we take these lows out. In case you guys are wondering, all 45 of you that are watching, cam 1, cam 2, cam 3 that takes out the consolidation, take 50% of that, and all three of them are sitting right in there. So there's your cam models. Like array to like array? Yeah, I can show you that in a second. I'm still bothered by the lack of correlation between Dow, S&P, NASDAQ. Dow goes higher today, precisely at times when ES and NQ go lower and vice versa. That's weird to see. Now that's why you're way better at that than I am. I have no idea which one of those supports price and doesn't support price, and I have no idea when one of them isn't working, how the other one should be influencing it, or I don't know, understand SMT stuff. I never did. Even when he first explained it, I saw it, got it, but it's not something that's sticking in my head very well. So there's our market maker sell. Well, it literally struck the happy face, ate the carrot and left. Could have asked for a better one. Oh, Canada. I love it. I love it. Ah, Derek. You get some love on that one, buddy. That was awesome. You get some love. That was great. You get happy faces laughing in love, man. Maybe we should have a national trading anthem related to our streamer. Oh, that's funny. Oh yeah, so like array to like array. So when you're looking, Vittorio, when you're looking at a range, okay, so see the swing point here and a swing point here. When I talk about like array to like array, so in other words, we say this is what? This is a BISI, right? So a like array, something that is like that is in the premium array, or the premium portion would be right here. So it would be a BISI, or on this side, now that we're running back up again, we'd say premium array, SIBI, to a discount array, BISI. Like array to like array. There's a fair value gap and a fair value gap. So they're the same. When you're looking for like array to like array, when you've struck an array in a premium level or a discount level, look above you to see if there's one that matches up with that. Chances are there's a high probability that the algo will reach to the same similar array above, which would be the opposite of this. So if it's a BISI, it would be a SIBI, or a BISI and a BISI in this case, because it's in that larger range. Does that make sense? So like array to like array. Now that would be the same for a imbalance. Look for an upside imbalance. Is there one that there's an upside imbalance? There isn't one in here. So like array to like array doesn't work for that one. This one here, is it a like array? No, it's in the mean threshold, sorry, the equilibrium. So it's not a solid one you want to reach for. Yes, you can reach for it, 50% and reject off of it. But we want to go from this like array. So now this breaker, you want to see this hold price. Man, I should have left my original entry there. We'd be just screaming right now. I hope, who took that? Tell me somebody took the trade that I didn't take. Tell me somebody got that. Does that make sense, Vittorio? Good. Tell me somebody took that trade and you just got out at the rejection block, or you got out down at the breaker here. So breaker, like array. What's another like array? Above it, breaker to breaker. BISI, SIBI, discount, premium, like array to like array, like array to like array, like licorice to licorice. So if we blow through here, look for a higher array that is similar to the one they just hit and you're reacting off of. So if we continue down, that's fine too. Then we have a longer range that we get to look at like arrays. Discount, premium, in a bigger range, because now we've blown deeper down into a discount in a larger range. So that's where your eyes have to be constantly shifting. If we blow through those lows and run down, then we're running into a discount array. What's one above it? Right up here. If the breakers don't hold, then look for an upper PD array they could reach for. So you watch this off of here and watch back up there. Nobody took that trade. So on a larger perspective, this whole range right here, we had one here. Where's a nice good discount one way down here? Right there. So we could still finish this off down here. I may not visit that. We may just come up to an inversion, which is right here. We can actually pull this one now. I want to see this one continue through here now. This may be the start of our final rally down. That would have been the perfect entry for the big massive run down today. Mark my words. Look at this sucker right here. And we're going to look back on this at the end of the day or tomorrow and come back and say, look at that happy face. We nailed the spot, but I took my damn trade off for this beautiful run down back into this, all these big pockets of liquidity here. If we get another run back up into there, I got a tiger by the tail right there. I'll tell you if I got it. Especially if we don't take these lows out yet. If we run back up into a premium array, like to like, like to like, load us all on, get short, really tight stop loss, less than 1% of my account, with all three of those trades added together, and come blastifying through this lot. Oh, good for you. If your rules say stop, get out, then good for you. I love your rules, my friend. Rules, rules, rules. I've never been a rule follower. If all my teachers were listening to me now, they'd be like, don't listen to that kid. He never followed rules. Always a bit of a rebel I was. But these are my rules. They're my own rules. I have to follow my own rules, otherwise I'm not even listening to myself. Well, there's a lot of equal highs above us there. Come all the way down to this guy here. We may end up just getting this little... Watch this one. Wicks will not do. Watch this. Like array to like array. If I get 3 entries here, I'll get 3 exits there. If I get 1, my first one will be taken out there. And I will close off those other 2 if my other 2 don't get hit. Discount to premium. If I'm wrong, this fails, I'm out. So there's 2. And what's so magical about this one is if this comes down and tags this third one in, it'll be a scale out in an area that you can scale out logically in. And then that will be a mic drop moment. That'll be one of those, well, I'm going to leave on a high note and leave you people to go, what the hell just happened there? Blastify. To blastify is to is to aggressively move to the carrot. Exactly. So you guys are getting your own dictionary. Vittorio, you're killing me, man. That's awesome. Darrenism. Okay, so there I'm in. And my failsafe is going to be right here. Right there. So now I've closed below that. Oh, that should have been my exit right there. Oops, I wasn't supposed to click that. That was my new stop loss right there. I wasn't supposed to click that. Shit. Now I need you to come down here and make me feel better. That would be my new stop loss there. You want to see that really start popping up now. I would have moved it from there right to there. I just don't want to see that low get taken out again. Yeah, you're still below this inversion. Now that low is my new low, so I'd move from there to there. Just because this is absolutely tight fail-safe now. If it comes in and taps it, I'd be out. I clicked my damn button too soon. This is how I would be managing this right now. From there to there to there. I don't want to see it go below that. If it does, then so close. You want to see that leave now. And as soon as it broke above that, I'd move it this guy to break even, because I don't want to see it come back and revisit this candle here now, because we've already popped above it, came inside. I wouldn't want to go any more there. Crap. And then I got to close all these out now. So that would have been my magic entry. I pressed the damn button. Watch that march all the way up to here now. And I'm going to say, that trade worked. I just clicked the damn button on the exit when I didn't want to do that. So right now would be, I had it here on those three entries. Stop loss was here, came down, body traded below it. So I was like, okay, so if I trade below that low now, because we went here, came back up, I thought, okay, so if we trade now below that low, I'm out. And then when that candle finished, it was like, okay, now I'm out on that candle. Now that one finished, I'll be out on this candle. And now I want to see it get above here. Like, that's super tight. But there's no way I want it to go any lower than that. Otherwise, that tells me it's coming back down deeper, so. Damn. Seek and destroy conditions, absolutely. So now you've got this rejection block here. I wouldn't want to see it start, because now we're like, see how the body's just getting above that inversion now? Let me just draw that out, because this is all hinging on this thing right here for me. It was all hinging in here. And the desperation was trying to hold on to that low, that low. And this little tiny imbalance right here. That'll make me feel better. At least that's where I was now. I'll put my stop loss back down here. I'll have one entry now. They came back for me at the bus stop, pick me up, take me for a run. Now you can go up there. I'm going to put a sell side limit there. Get above that high, I'll bring it up to almost break even. I'll bring it to here. So you see where we're at right now? We're compressing like crazy here. We've gone from premium array, and we're inside this candle here, so you're right down deep in this. So you're even past the midpoint of that. You're literally in premium array into this discount portion of the inversion. We've swept that, come back up into premium array again, back down into discount array right here, order block. Now we've popped up above it. Hallelujah. Now I can finally move my stop loss to break even. You'd scale out a portion there. If it comes back, takes me out, I'm all right. We're in a shitty consolidation here anyway. Here's your Cam 1 model coming up. You haven't really got out of this consolidation yet. You want to see a big bold candle pop up now. I'm at the bottom of this inversion. It's been worked so many times now, I don't want it to come all the way back through it again. Midpoint, yes, but not the rest of it, because I want this order block to hold price now. So there's a logic. I'm following a logic. I'm not just randomly moving my stop loss. I'm looking for a logical area that if it comes back, then, you know, I'll take my 20 bucks. It offsets some of the losses I took here. Order block, see how we validated it here? Come back, tap it, go. Start climbing through this thing. This inversion thing. So we still like to see this thing provide support. Yeah, it can come back and tap it. Ideally, I'd like it to stay open and start pushing higher, but if it comes back and taps it, that's fine. I just don't want to see it drive all the way through to the bottom again. Mean threshold. So now I don't want to see it come below here. It's come down to the mean threshold, tapped it already once. I want to see it get going now. I don't want to see. So it's the same kind of thing I was doing here, but watching these ones coming behind. I'm doing the same thing here now. I want to take my maximum profits here. And if I'm wrong, I don't care. They're not gonna take me. And I'm looking, this is how I'm managing the back end. It's logical for me. It may not be logical for you, but I've seen this hit through here so many times now. We're stacking on top of the low, or we've ran all the way through it, then the low becomes support, then the middle becomes support. Now I expect the top to become supportive and keep going. See, like that. This is that stagger, or that remember that breaker thing I mentioned? Go back through the video, you'll hear me say it. When the breaker has the high, then it resets and does the mean, and then it comes back to the body, then it comes back to the low. Same thing as what I'm seeing here. I'm seeing this stepping thing inside this. So as it finds, it comes back, runs all the way through it, and I go, that's fine. Oh, now it's finding some support at it. Now it's finding support at it. If it finds support at the high now, I like that. And you see how it's hit it and it's rejecting off. So the same kind of things that you see on a breaker happen on all the other PD arrays as well. When they get stacked on top of them, they finally get support at them. You'll see them starting to develop the support at those key levels like that. So now if it runs all the way through this again and it didn't stack it there and decides to run back through, it's okay, I'm out. My trade is done. And if it takes off from there, then I have to adjust my rules. And I'm okay with that. Because right now I'm banging between here and here. Even though we're in a discount array, this whole discount consolidation here, I want to see that run up, hit that level, come back, find a cam 1 entry and go long, or leg up, hit that, run all the way back through, cam 1, 2, and then a 3 leg up there. So hopefully you understand the logic behind why I'm trailing my stop loss where it is. Now I don't want to see it go below this swing point here. Now we've taken that high, so now I'll take this, and again I'll put it just slightly below because it may come back and just tab it one more time. But I want to see that order block hold price now in the mean threshold. Or the opening, it's fine. Mean threshold. So hopefully you're seeing that I'm still looking for logical levels inside a consolidation. Every freaking candle, every wick has a specific placement. I don't want to see it break. If it does, I'm out. And I'm out with some profits. And hopefully recoup some of the losses I took with the 3 entries here that got me short. I was trying to go long there. It took me out. The rule broke and I had to bail. Now the rule supports. Now I'm back in again. Right off that little imbalance right here. Catch that one. I'm back on track. I'm back on side again. Mean threshold holds price. See? And then you want to see this. See, we're stuck on here. See how it keeps banging on that? I want to see it pop through that. Otherwise, we're just banging on heaven's door. Knock, knock, knocking on heaven's door. And then come back into this. Bing, bing, bing. I don't want to be playing those games. I don't want those reindeer games. Get the hell out of Dodge. Because now I'm literally going to be banging around in here. And it should come back and take me out now. It's already eaten through that order block. So take your 90 bucks. 90 is my favorite number. Let's get out of here. Oh, wrong one. Crap. 100 bucks. So it would have taken me out anyway because I lost the mean threshold. So now we're stuck in here and here. Tippy tappy off of it one more time. What do we have that's in here? Right there. Now if you want to be super right, we want to get in right there for a buy. I'm just going to play here. I'm just playing off of PD arrays because I just want to see one array to the next array. I'm going to try and start doing this in front of you guys. One array to the next array. Premium discount. See if I can catch some runs here. And then the stop loss is going to be super tight because I don't want it to get below here. See how the bodies are respecting that inversion still? Right to the mean threshold. Mean threshold. See that? Hit it, react off of it. Mean threshold of this. Okay, trip me in. Now you want to see that right back to this inversion here one more time. Oh, we might even be able to go just a little lower than that. We might revisit this one more time right here. There you go. It's in a discount array. Sure, why not? Don't want to lose the mean threshold though. Look at that. Beautiful discount. Still inside that range. Snap off of it. Run for a premium array up here. I want to see this give way now, and I don't want to see that get retapped. So I only got 35 bucks. Oh no, it's going to come back there. I gotta give it some gas, Darren. Give it some gas. There, it's in it. Look at that, right on the mean threshold. No, I don't want it to go lower than that. Take me, that's fine. Now we're going to close below this. If we do, now we're back down to we ran the highs. Now we're looking for discount array. Run these equal lows out here. And you'll see that now we've changed direction. Inside the consolidation, watching every freaking candle. And if that just came down to the rejection block, which it did not take the lows, just went to the rejection block and snapped off that. But we've traded below it now. See that? So we have more downside. So you see price has changed direction on the 1 minute chart. You ain't seeing squat on any of the other charts right now to prove that that's direction has changed. But the 1 minute you just saw it, now I'm bearish. I'm not bullish, I'm bearish. Overall, you may be bullish, bearish, whatever. But right now, in a 1 minute chart, I'm bearish just because of that. And I reserve the right to change my mind when something new comes along. If we run above it now, I'm bullish, because that's a key factor. And you're in a consolidation, so this is where it goes bullish, bearish, and you start running out of higher PD arrays, lower PD arrays. So premium, discount. Inside this small range here now, that candle and that candle are your two players. Look at that right off the bottom of it. See how it snapped off of it instantly, came back down to this guy. We'll go to the body. It's not touching that guy yet. That's still open. So now you've hit the body of that candle. So we had wick, hit it, pull back, drop down, body, hit it, drop down. Now we're going to run back to the discount, because premium and discount. So you run up to premium inside this range. That's 50%. And yes, it's 50%. There's your discount. Just tapped it right there. We're calling this because we know where this candle, we know where the wicks want to reach for. Now it's going to say, now I'm going to get body to body. You've hit the body here, so hit the body here. Go to the mean threshold. Inside that inversion one more time, tap the bottom. You want to get above it now. You've run down to a discount inside this range. We hit the mean threshold. You want to see that hold price now. You want to see it move up into mean threshold of this candle. Like array to like array. Validate this. That becomes the equilibrium of this little range. And you want to see that climb on top of that and start going higher. If it doesn't, if it rolls over, that becomes the support. What is this? It's a breaker. It's a last up close candle before a run below these lows. So are we expecting to see some support off that? It's a senior array. So yes, it hit it. Now I want to see it just blow right through this sucker, because that's just a regular old candle. It's not a breaker. It's nothing. It's just a regular order block. So I want to see that one give way and us run down even further, because the breaker's the senior candle. If that does give way, then that's a good indication that we've got a stronger drive higher, because a breaker, a queen beats a pawn, a chess piece. That's a queen versus a pawn. Pawn's hasn't built any strength yet. So right now, queen beats pawn. If we lose the queen, we're going higher. If those of you are into chess, for example. Just calculated, I have well over 200 hours of live stream to catch up on. Yeah, there's a lot in there, man. You can see how Michael has thousands and thousands of hours of live stream. And we were with him back in 2016. We were live with him, and we'd meet up sometimes twice in a day. I'd have to get up at 1 o'clock in the morning and meet him in New York, London, open. It would be like, wow. So you get these two live streams, just like I'm doing with you guys. He'd do the same thing, and he'd have his own broadcasting video to do it on. We didn't do it on YouTube. But yeah, we'd be sitting with him and he'd be going over price action. Not minute by minute like this. He'd be sitting there and talking, but he'd put a box down here and say, it's probably going to come into this little box. And we'd be like, there's no way it's going to come into the box. And it'd go up. See, he's wrong. Poof. Comes right down in the box, right in the specific time he said. Then it would go. So breaker's holding. Breaker, you lovely little thing. Order block, queen beats pawn. Done. Don't you love it when this stuff works? Isn't it exciting? Don't you guys get excited by this? When you see price action in a consolidation actually working? When you read it minute by minute? Man, you guys should get excited about that. I get excited about that. When I'm looking at price action and it's doing what I expect it to do, every candle, every wick is going to where I want it to go. Man, that's exciting. That's practice, my friends. You don't need all those other charts. You get it right here, you'll get it right everywhere else. Everywhere else. Bam Bang Samatri. There's a new guy. I think 130 will run the lows before rallying up. Okay, I like what you're saying that. That's a great prediction, Bam Bang, but tell me why. What's your reason? Don't just guess. Tell me why. And I'm not saying you are guessing, but give me your reason why. Otherwise, no offense, but it sounds like somebody's, we can all guess where it's going to go, but give me your reason why it's going to go there, and where is your support? Where's the fail point for you to prove you or disprove you right or wrong? I'm impressed with that. You give me your reason that supports it with what fair value gap is your fail safe, then I'll go, you're absolutely right. Because then all it is just monitoring your trade. This is traded below, traded back into it. I'm short now. I'm in this solid because we got a breaker. Breaker's holding price. We said that queen beats pawn. We want to see that give way. It did. Came back in to our inversion. So I'd be short for that. Take out the lows. I'm right with you, Bam Bang. Right? But here's my reason. I don't want to lose this inversion right here to continue to support that idea. I want that to hold price and continue on the downside. Take that low. Then we're looking for, there you go, lows taken. All because we said that queen beats pawn. And we expected that. We saw that right off the order, off the candle in the body open. Found some good support at it, and then senior candle beats junior candle. So if you have an idea saying, I'm going to take a high or low, tell me the reason behind it. Don't just give me a high or low. Tell me your reason. Where's your fail safe? You guys will develop a fail safe and your stop loss. My fail safe is here. My stop loss is right here. If I lose this on a close, my stop loss is I'll take it back here when it comes back into it. I'll close my trade out. That's my stop loss. My fail safe is right there. I'll be like, great. Now you have a trade plan set up to support your run for your low. And if you have that, Bam Bang, good for you, man. You just nailed it. You just nailed it. Didn't pick my order up. It's okay. It does it all the time. And there's plenty of opportunities, my friends. We now have a consolidation that we've traded below. What is that? That's a cam 1, 2, 3. All right, 1, 2. I'd say it's just a cam 1 or 2. Been laddering down since it took out the high there, yeah. And I had a freaking order way up there early this morning, and I talked myself out of it. So many I've talked out of myself. Premium array. It's inside the one that we want to get support off of, so stop loss would go right here. And that you want to see provide support. So your entry in here, you're just above break even. Now, premium discount, ideally, I would not want to see it get any higher than this point right here. Right there. Tap on that. Right there. Tap on that and you can leave. Or tap on that, even better. Good. Lovely, lovely. Now we've got like array to like array. Premium, discount, order block, validated, fair value gap, fair value gap. Like array to like array, premium, discount. If it drops in here, we'll expect it to come up here. Unless it blows through the mean threshold of that candle on a close, then you go good. This is just a simple return to inversion and a continuation on the downside. That's what you want to see. Those of you who are short, you want to see this give way right now. And as soon as it blows through that low, stop loss moves to here. Unless you don't want to cover your higher PD array. So see how we've come back into it, filled it, like array to like array. Start heading up for this guy now. Small little range, but you'll see what I'm talking about when I look at one array that's similar to another array that's similar. So if you're going to get short again, you missed your run, right there. Put your entry in there, and there, or there. Stop loss sits here. If it trades above you, hopefully it comes back to get you out at break even before it runs up higher. Because this is our fail safe. Or right here now, it's this guy. That's your fail safe. I hope that makes sense to you guys. Am I long or short? Well, I'm definitely short now. And I've explained to you why I'm short off this breaker. I explained this breaker we're coming back to that breaker. I explained queen versus pawn, stronger array versus weaker array. We're expecting that to provide support. We're overall bearish for the day. So again, bias is down below. That provides support. You broke below this. That validates that again as a down. Came back up. Good strong hit off of that. Come down, break lows. Great. Come back up into a premium array. And you'll see the premium array is not just a fair value gap. It is a 50% or higher premium array or premium zone. And discount, continue on the downside. So yes, I've explained my bias. I am short, Mr. Invest. Barry, wow. Bang, almost out my PM hours start 1:30. Kiko Pants. Kiko Pants. I like that word. That's cool. You got a cool moniker there. Kiko Pants. Kind of rolls off the tongue really well. Kiko Pants. Equal lows, relative equal lows are high probability liquidity levels where price trades targets. Yes, yes, yes. Absolutely, my friend. Kiko Pants. Knowing that, it gives us confirmation the 1136 fair value gap will most likely fail. We've already traded below this guy. Is that a good sign? Hells yeah, it's a good sign. Tap on that. You can react off that. Or there's a little inversion right here. What does this become? It's graduated. Breaker. Fair value gap. Just keep rocking it down now. What am I targeting? Ah, so you're saying, what is my trading? Am I trading front end or back end? Is your question. So that when you say targeting, you tell me you're a front end trader. You're targeting these lows here. Then you're targeting this fair value gap, and then that one, and then that one, and then these equal highs over here. And if you're trading it from the back end, you don't have an objective to reach for because you're running the back end of it. You're managing it from the backside, readjusting your fail point, readjusting your fail point. And if it fails, then, and you didn't take it out at the right there at the rejection block, and it turns up against you, and you didn't take out a portion there, you get to live with some regret, because that's whatever you're. I can't tell you what you should trade for. I would manage this from the back end. Had I still been in this trade, I would have been, especially up there where I initially had my entry at the happy face, I would be managing this from the back end. These inversions, I would want them to all to hold now. And when I break through the next one, I would move to the previous one. Because if the previous one holds and the second one doesn't, then I know I'm coming back for my stop loss. As soon as it fails there, I'm back. I'm out and I take the profits. Right now, this back end would be just delicious right now. You've taken that low, I would move this stop loss to just above this inversion right here. And we're heading down to here. Do I check my DMs on Twitter? I'm not sure I know how to check my DMs on Twitter. Stand by. I don't get messages. I just get notifications saying people are. Yeah, I just get people saying they're following me. I don't messages. No, nobody's messaged me at all. So to answer your question, invest. If you have questions, that a good place to go is to get me is on Telegram. We're all kind of those people are interested in after hours chatting with me. Then you can find me on Telegram. The link is in the description above in the ThetaWaveTrader at the top, right in here where it says more links. Click more links and you'll find Telegram. Click right in here, and then you can pop in there. You can ask any questions that you like. I'm happy to answer any questions you got there. Or at the bottom of the video today, if you have questions, you can. I usually pick up DMs inside that a video. If there's a specific video you like, you have questions on it, just drop a question inside the information at the bottom of the screen you see here, and I'll endeavor to answer that. Usually it pops up there. I'm in Facebook, I'm in Twitter, I'm all over the place. I'm trying to get the word out there, show people how price action is not as daunting and scary as you think it is once you understand it cleaner, right? Order block does not run above an old high. It is a parent breaker of this larger run above these highs, but not that one. So if these two are added together, it still wouldn't give you a run above an old high. So this would be a mitigation block. Mitigation. Last down close candle that does not take out a previous high. Mitigation. So you come back to mitigate off the bottom of it. If it holds, great. It's a lower order piece. If you're into chess analogy, it's a lower order piece. Order block, look for a return to here. Get some support off of this. Because if we don't, I like another run back up here and here again. Like, don't think that this is the end of it, because right now we're going bullish. Because right now I'm bullish, not bearish. And the entry, in case you're wondering, if you're watching, where's the entry? Right here. See how we've closed above it? We come back, find support at that, and start pushing through. Stop losses here. There's a little inversion here, so you can allow for that to come back and tap that. And then look for further upside prices. Then you're looking for these old highs here and here. So when you're talking about price switching up on you, yeah, there is a break in market structure to the downside. This all supports a downside run. But right now, I'm bullish. Right because of that. Now, if we trade back through it, I will return back to bearish. But right now, if we trade back to this, and that becomes a swing point, that is my goal right there to reach for. Here, bounce up, take it out, and then I'm aiming for there. Stop loss would automatically just come ripping right up. Once I broke that high, I'd move to break even. When you're in these kind of really quick, choppy type of trades, and again, it's my strategy. It doesn't have to be your strategy, but there's a logic behind why I would do what I would do. See how this body here? See how this inversion here? We had a body trade above it. We came back inside it right here. Tip, tip, tip. We're tapping it. I want a discount. Yeah, that's one, but this one is the first one that occurred, so I'd like to see it come back into here. Get a nice little discount inside this little range that's starting here. And get really close. So really minimize my stop loss by getting something in here or on here. So I would put like right here, I would do this. I put a buy order in like this. Now people might go, you're nuts. So yeah, I could be nuts. But if I catch the right end, you'll be like, this guy's magic. I'm only acting on what I see, a change in price, on support of inversions. Cody loves these inversions. Inversions, I tell you, they're like high order senior pieces in your game when you're playing. These become high order pieces when they become inversions. So you could go like this. You could say here, buy. We'll do two of them. You might get this guy here as well. This might be the only thing that gives us something. And then you'll see what it is I mean. Because when we get on top of this, then it's definitely bullish. Again, for the nearest high for the time being. So now we've got these two. If we come back down into here and then reach up, I'll be aiming for that piece there. I see it now. Do you trade Globex sessions? What's Globex? Do I play Globex sessions? Never heard of them. Sorry. Kiko Pants. I love that. Kiko Pants. I just joined the stream. I really like how you always explain why. It's my favorite letter. And every time I taught my students in paramedics, I always said to them, if you can't answer why you're doing something, then you need to go back to the books and study a little longer. Always, always, always have a reason why you do what you do. Otherwise, you're gambling. You do not have a solid trade plan as far as I'm concerned. Just my opinion. I'm not judging anybody if you don't do it that way. That's just only how I see it. And hey, isn't that the big trouble we have in the world right now, is people judge everybody else by how we value stuff? So I'm not doing that. I just tell you how I look at it. I know what makes sense to me. And if it makes sense to you, you're welcome to it. You can say you created it. I don't care. You can make millions at it, selling it on the market, and I'm not chasing after that. If I give you something that you can turn around and make money on, all I ask is please pay it forward. Help somebody out along the way. You want to call it your own? That's no skin off my nose. I'll still make money on it. I just joined this gym, expecting that 15-minute fair value gap to be inversion fair value gap. Ooh, let's look at the 15-minute. We haven't looked at that really, have we? I do like this indicator. I know. I do like the ones that set out the AM session, the New York session, the PM session, because sometimes you get a there's a trade, there's another entry level trade that occurs from London when I'm not usually awake to do it anymore. But when it happens, the Asia session, you'll see this Asian session high. London will run up, take out the Asian session high, trade below it, come back into it, hit it, and go short. It is also consolidation. CAM Model 1, CAM Model 2, CAM Model 3 into London. Check it out. If you don't believe me, check it out. You'll see Asian session consolidation. So CAM 1, CAM 2. The London session pumps it up above the highs. CAM Model 3, which is 50% of that leg that takes out those highs. Then when it comes back into CAM 1, CAM 2, CAM 3, get your entries, your stop losses and above, and you catch that massive dive down into New York Open. Trust me, go look through the charts at it. You'll see it happen so many freaking times. That's why I want to go to Greece, my friends. Trade from Greece. I can catch both London and New York sessions from there. See that imbalance right there? Boop. Pops right into the imbalance. Left. Took out that high. All in one candle. Popped down. Ran back up. Cleaned it out. All in one candle. You got 10 handles right there. 83 to 91. Sorry. You got 7 handles. Told you it was going higher. Everybody was going, hey, it's going lower. No, it's not. No, it is not. It's tipped its hand. And that's where you got to be watching, folks. That's where you got to be watching. Inversions. Inversions. What is Globex Invest? Tell me what Globex is. Expecting the very. Oh yeah, sorry. See how my ADHD tears me off? We were talking about fair value gaps over here on the 15-minute. Right there. Do you see that little guy right there? Who's the one calling this one? Bam Bang. Right there. See that inversion, that little fair value gap right there? It's an inversion. Kind of mark it out and see if it plays any support. Right now you're stuck between this guy here and this guy here. There and there. Well, not really even this one because we haven't validated it yet. So you're between this guy and something down yonder way. Oof, my God, they're way down there now. So you're just finding support off of this and make it looking for new lows because we haven't broken this order block yet. So you're really only on this guy and whatever upside or downside candle is further down here. So you're really looking for a downward run now in the 15-minute. But you see how the 1 minute is contrary to that? We've now traded above this, come back in, found support at it, and we're heading higher. And all because I was telling you right here, we've changed our tune. I was hoping to get long there, didn't get it. So now I'm deleting my entries. Sticking my tail between my legs and saying I missed the run, but that's okay. The fact that I see the turn is what you guys need to keep in mind. So it doesn't matter about SMT for me right now. It doesn't matter about all those other what chart affects what chart. I just say, nope, we're bullish now. Nope, we're bearish now. If I can get on that, I'm long. And if I can get on that long and I snug this sucker up behind it, I'm sniping this and I'm managing it from the back end. That's my propulsion candle now. I'm looking for that to get support. It's right inside an inversion, which is beautiful. Provide support. Keep pushing higher. Run for this high here. Don't forget you're in a premium array now. You're right up in the premium array of a breaker, up close candle, down close run. So is it a senior candle? It's a senior candle. You better be scaling out something there in a range. Don't always aim for the highs. Sometimes it's just the breaker you want to aim for. You're trying to get more juice out of the orange by going here, 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 here. You may not get it. It may roll over, according to our 15-minute candles, to go bearish because we got nothing that really supports price going higher here except for the mean threshold of that candle, which we just hit. And now we're looking for a pullback and go lower. So I'd be like, yeah, get out right there. That breaker is that freaking mean threshold right there. See how they overlap? Now this could be just the turn. Now let's check the time. What do we call this? Crazy Ivan. Now you can see the run back down. This is the Sonar Crazy Ivan. Return, look back, and then continue down. Oh, there's so many things I want to show you about, specifically time. Is on your side, is on your side, is on your side. Just join Telegram. Thank you, Invest. Welcome, welcome, welcome. You got some great people in there. And those people who are joining us on the Telegram, absolutely got to be respectful. You got to be kind, polite. If you've got an opinion, I want to hear your opinion. I don't want to hear attitude. I don't want to hear that's bullshit. I don't want to hear that sucks. No, that's not an opinion. That's not an opinion. Hey, this particular setup doesn't work for me because blah, 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 or I'm not sure about this setup because of this, and this. Use your words and describe why it is you don't like something or you're not sure about something. That sucks. This doesn't work. You guys bite. Whatever. That doesn't work for me. You'll just be banned. We're in a community where people care about keeping this stuff germane and real. I'm in these longs as well. Sweep the liquidity and disrespecting bearish arrays. You're in it long? Just remember you're counter trending here. The overall trend is low for the day. We've been calling this lower all day long, but we are reacting off of all turns in the market. Some of you might not want that. Some of you may go, that is way too much focusing on damn candles to go nowhere. That's a lot of brain energy to exert to go nowhere, to go in a very small area. That's nuts. Just stick in a 1 hour chart. While you guys are bashing your heads against the wall looking at candles, I'm out at the beach. ¿Dónde está la playa? I'm at the beach. Where's the beach? Overnight sessions. Not that one. See at your bull limit price level. Oh, not that one. See at your buy limit price level. Oh, up there. That's where you've got your long set for. God, that's great. Don't forget though, if that's your goal to get in there, which thanks for reminding me, I got to get rid of that one. If that's your goal up there, you got to say to yourself, I want that to be my goal, but I will reserve the right to change my mind at any moment. So if I lose this PD array here, this inversion on the downside and come back to it, say goodbye to that idea, because now it's changed. Instantly it's changed. And then if it trades back above it, you go, oh, no, it's back on the track again. Oh, no, it's not. It's back off the track. Then it's back on. All the time it's getting above or below this. That's the decision-making part right here. And it's also a consolidation that is forming for more CAM entries for either long or short. How do we act off of this consolidation? Do we bust it up higher, come back, find support, and get more hells yeah up to there? Or do we bust up here, tear down here, come back, find support at see CAM 1, 2, and 3? Like, let your mind just see this stuff forming and go, I can't wait. Look, man, I got 3 entries coming up here potentially right now off this model that's forming in front of me on a 1-minute chart. If it's forming on a 1-minute chart and you're already armed with CAM 1, 2, 3, you can sit there and you can smile at this and say, I have no stress waiting right now. I have no panic. I'm going to trade this thing right here. Wherever it gives me, up or down, I don't care. I'm looking at this consolidation. I get excited. Just see, build it up, boys. Just keep mucking around in there for 10 minutes. I don't care. But the moment you break out above me, I'm going to tap down and get my cam 1 and reach for the first high I can find. First high, I'm going to scale out a portion there. And then if it keeps running up, great. If it turns around and I see a fair value gap in there, that's my safeguard, my fail safe, my stop loss. All that stuff I've been trying to show you how to manage your trade. It becomes fun to look for these things, not stressful anymore. Right? You start to say, oh, I can see it forming. What do I need to support this? Now start building your trade rule. What's your trade plan? If that's my objective, what's my trade plan now? If this busts out here, woohoo! You just take off a little candle. Don't be a wick. We used to say don't be a dick, but now don't be a wick. Get up there. Climb up there. Climb up above that thing with a bolt. Oh, don't be a dick wick. Come on, get up there. So you want to see consolidation above, tap down, 1. So cam 1 is from high to body. That's cam 1. Cam 2 is the mean threshold. Sorry, or consequent encroachment or equilibrium of the range. And there is no cam 3. This whole model can be traded from above. And then if that turns into that cam 1 turns into a cam 3 and books it right down below through you, then you're going to expect a fair value gap to break to the upside or downside and then find support on it, like this. That's why we wanted to go long there. We didn't get in on it. Who cares? Whatever. This sucker happens all the time. Now get up. A bold candle, not a wick. I want to see a body get above that. Otherwise, this is where you mark out your consolidation. Look for your 50%. Once you put your box in there, let's say this ends up being the consolidation. You've got your cam 1, cam 2 entries already. Cam 1, cam 2 entry, stop loss goes here. And if that fair value gap is lost to the downside, then your stop loss is fail safe. This is your stop loss in here. Watch that guy. See, it's already forming. And we're forming with every damn candle. Every minute candle that forms, we are watching our setup form right in front of our eyes. There's your cam 1 model coming up right now. And you may not get it. Now, if you get that, that's great. There's a cam 1 model. Stop loss here. Very small leverage because you're the maximum distance away now. And what are we aiming for? High, high, and hopefully up here. You got another high here. You got fair value gap. Fair value gap. You got 1, 2, 3 PD arrays in there. You got 1, 2, 3 PD arrays there. 1, 2, 3 PD arrays in there. Now some of you are going, come on, give me my cam 1. There's your cam 1. Now you want to see that, just book it out of there. There's your 1. I like that little imbalance. When I see this, I'd be aiming for here. I'm actually going to put one in there just for shits and giggles. I will put a buy order right in there. And that guy there. So if we lose this on a downside close, and my stop loss is going to go right here, and I don't care if I don't get it. We're just using the cam models now. If I don't get it, and it blows right through me, then I'm okay. I'm only going to lose 125 bucks. But if it comes down and trips me in, and a body closes below that, that's my stop loss. This is my fail safe. My stop loss is right here. When the body closes below it, comes into it, I'm out. That's my rule. And I'm going to do this so I don't end up doing those stupid clicking thing. I can just hit that sucker and turn it right off. So those of you who are into cam 1 may just be on a nice little run now. If that takes off on you, you'll be like, cam 1, you should have followed cam 1. You cam 2 people waited too long. So ideally, now that's at the high for your 10 banger. So there's 94 to 301. Okay, so this is making a new high. And there's a new thing I've been working on. I've been watching. And if you're a paramedic, you'd understand what I mean by PR intervals. So if there's anybody watching that's PR interval, look at the PR interval right here. And think of a class 2 heart block in reverse. I'll just give you that as my hint. I don't know if it's true or not, but it's just something I'm looking at. When I read ECGs, if you know how to read ECGs, think of a class 2, second degree type 2 heart block. And that's what I'm looking at there. But in reverse. The reverse of the definition of a class 2. Overnight, what sessions indicators? What's the session indicator? Oh, the session indicator is called ICT sessions, one setup for life. How's that? How's that for the love of the boss? I entered long when we tapped into the fair value gap. Good for you, Kiko Pants. Asian or London? Sorry, I missed the context of Asia. I might have started a half sentence with my OCD, ADHD kind of mentality. Start half a sentence because my brain's already off on 10 other conversations. So I apologize. You got to keep up with me. I'm all over the place. Thomas, she's in the kitchen cooking. Haha, bad joke. ORO or PLOMO. Which data feed to choose to live trade from a broker? CQG or Rhythmic? Thanks in advance. Holy smokes. My friend, you are way more on the ball than I am. I have no idea what you just said there. I could not give you an honest answer there. Can anybody help him out? From your experiences when you're trading from a broker, CQG or Rhythmic? Never heard of either one of them. So can anybody help ORO out? Bang, bam, 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 bang. Those buy limit that you have deleted. Check on that price level there. Is a 50-minute figure far to the far left. Oh, okay, I'm tripped in. Okay, so I want this to provide support now. It can come back down into here. It can even come into there. Stop losses there. I want to see that kick out of here now. Don't you just love it when it trips in and you get a reaction off of it? Even if it blows through me, I just love seeing that. I just love seeing it. Got some equal highs above us here. Now, when I hear you referencing your 15-minute chart again, I only use these charts to aim for a specific PD array. Like if I'm looking up here and I go, you know what, if we're going to run up here, the next PD array above this range that I'm in a 15-minute, if I was aiming for a quick snipe, I'd be looking for here, which is right here. And the midpoint of this is what? So the mean threshold of a 15-minute candle is right in here. So it's right inside that inversion again, right? So this is a level of precision that you can see on a 1-minute chart. After those people who are thinking we're going long, 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 and I said, nope, we broke to the upside. We broke, it tipped its hat and said, no, I'm not. I think I'm going to do a little reversal, a little retracement. On the higher time frames, I may not be, but on the lower time frames, hells yeah, inside a premium discount array. So now I like to protect my trade, so I'm pretty much going to go to the bottom of that trade now. I don't want to see that order block get taken, even though it could come back in here and knock me out one more time. We've taken the highs out now, so better to take some cash and move to the sidelines. But I like these equal highs up here. So that's worth $100 for you. Just trading snap array, like just snapping it down. So there's your mean threshold. See that? See it react off of it? You don't want to keep seeing it hit that. Just, you can leave now. You don't need to keep tapping on it. Rejection block. There's my line in the sand. And I've got the instant trade fill, so I don't have to worry about clicking and running over here and going fulfill my order. But the disadvantage to that is that once I click it, I close everything. If you have multiple trades on, like multiple levels, you close all of them at once. You don't get a chance to take a portion off. It's an instant close. So now what you want to see is, you want to see, now that we've been holding here, I want to see that start really lifting up now, because this little candle down here is doing its best to hold price. It's run above some highs, so it's a breaker. So it's a senior candle. It had its senior moment, came back, give a little tappy off the mean threshold, start pushing higher. Now I'm going to move to profits. Make sense? Does this make sense to you guys? Or am I just talking out my butt cheeks here? If you like what we're doing, hit the old thumbs up button. Let me know you like what we're doing. I appreciate. I don't debase myself to accept a little thumbs up. I do like the thumbs up. It does encourage my my channel. And those of you who are subscribing to the minute charts, I'm the guy that gets in here on the 1 minute chart, and I'll tell you what's happening on every candle. And you'll be able to tell if I'm full of crap. Within a few minutes, you'll be able to tell whether I'm full of shit. And as you can see, there's still a bunch of people in here that see the fruits of this labor. It is a labor of love, but it is all ICT stuff. Everything he's taught you guys, it's right here, right in front of you. It's as detailed as you want to find it. And if you find it and you practice at this level on a 1 minute chart and you hold it, it's going to make your freaking trade so bomber, because you guys are going to know where your fail points are. It is going to amp your trading through the roof, because you're going to know where they fail. If you're trading, we got my friend here is just trading on a 15-minute, keeps referencing the 15-minute chart. That's the chart you want to trade on if you're trying to get the fair value gap. What we're doing here on the 1 minute is what you're doing on the 15-minute. You just get to wait an hour or two before you get the final confirmation that you got 1, 2, 3, 4, 5, 6, 7 15-minute candles before it comes back and confirms that, yep, that's the one you still want. Because everything we show you on here happens on every single freaking timeline. Days. Do you see how sexy this becomes when these is day candles and you're catching this with precision like that entry we just took? My friends, that's a whole day candle right there. We're still in 1, 2, 3. We've been here all week, folks. We've been here on Friday, Saturday, Sunday, Monday, Tuesday. We're like here we're starting a new week already. And I welcome you back to your next week. Remember when we put that trade in with absolute laser precision? Lasers, like freaking lasers on their head. Precision. And look at this. We've been banking this for weeks. I'm sitting here eating bonbons and watching the candles grow, because we're trading it on a daily chart. What you learn here, folks, is what you do on any other chart that you prefer to play on. And you're looking for support. Constantly chase your trade now for support. Now we've got above this. I do not want to see this inversion lose. So now I just move my candle up a couple of days. because we're going to pretend these are day candles, and we're looking for old high. If you want to scale out here, you scale out a portion here. What is your exit strategy? Is your exit strategy every little high that it comes to, I'm taking it out. I'll take out a portion right there. If I've got 10 handles on, I take out. Now I'm down to 9. Now I'm down to 8. Now I'm down to 7. Then 6. Then 5. Then 4. Then 3. Then 2. Then 1. And I'm happy. And I've just scaled out everything. I've been paying the trader all the way up with perfect entries, my friends. Perfect entries. So in other words, now if I see, here's the fail point. If it trades back through here on a close, a body close, pops back into it, I'm out. I close out the trades. And that high we just took there, or I haven't taken it yet. This rejection block is all I would have had. So I'll get ready to close that when I watch this candle. See, it comes back to the body, the inversion, all the with those cut all through those candles. Look where it started, way back there. Now we wait and see. It either runs down and takes me with a so this is my fail safe is $65. But my stop loss is right there. And that gets triggered the moment a body closes below that, comes back, taps it, I'm out. Not a wick. I'll let it play. The wicks can do some damage all the way down to that inversion right here. I don't want to see that come all the way down that far. But it probably could. Look at that little tiny inversion. So I want to see that. Ooh, I don't want to see that pop in there. Popping fresh. Popping fresh. That's where I talk myself out of it because it's lingering in there. I want to see that snapping off. That's going to push down into this guy here now. Let me open this up so you get to see it a bit clearer right there. Discount, premium. What's in the middle here? See how you have to draw these ranges out all the time? 50%, 62% will probably put us right in here. That swing is what I want it to hold now. I don't want to see that go back below that. Oh, see there? There's that whipsaw I was telling you about. Whipsaw comes down, takes you out. That's your fail safe. $60. Do you consider that a fail now? Do you go back and judge yourself for not taking it out at the rejection block? I don't care. It's up to you. I happen to think that was a pretty awesome trade. We made some money on that. Now it's telling me something. I got 17 seconds left and I've busted through this. I've come back up to a logical level of array. Two seconds left. Now, have we changed? Am I bullish or bearish now? What do you guys think? I'm bearish. My inversion is broken. This inversion, a body, you can even see it happening before it happened right here. See, in my mind, I'm getting tired already. I missed it. Here's that break. See how it broke below it? Came back into it. Not here. Right here is where it broke on that side there. Right there. It tipped its hat, said, we're going lower. So I should have saw that and cashed out. Came back inside, ripped all the way through. Inversion, or sorry, your fair value gap. Took the lows out right there. Now it's coming all the way back up inside again, inside here. Now I'm short. Stop loss here. Looking for continuation on the downside. Unless we pop up above that, which we did, now I'm long again. See how quickly it changes up? We closed above it, came back, tapped it. Now I'd be short again if it came below here. So this is a pivotal point for you right now. So if you can go short and you can go long, what do? You move to the sidelines. You do nothing. You do nothing. You wait. It's a 1 minute chart, so you just keep waiting and waiting and waiting until you get something that's really juicy. Now this is really high resistance in here, right? We're banging around between arrays over and over again. Larger range. We got back into consolidation. We didn't take out any lows here, so we have this rejection block here. We bounced off rejection block. We're inside rejection block. We have not quite taken the highs yet. We're equal highs. Take that high. Good. Give me a big bold candle up here. Oh, who got in on the cam 1 here? And did we get a cam 2? I think you got a cam 2. I didn't see anybody saying they nailed a cam here. There's your cam 2. Look at that. Perfect. Cam 1 model right there. Enter in there. Cam 2 model. Enter in there. Running above old highs. You just took it. You're out. You're done. Have a nice day. Cam 1, 2. Move to the sidelines. You just made yourself precision entry and precision exit right there, right on the money. That's 306. There's 13 handles. Precision, precision, my friends. Cam 1, cam 2. I think that's going to be it for me. My brain's getting tired. Somebody else take over. Cam, consolidation. Oh, sorry. I like rhythmic, but I've never used CQG. You guys might have to explain what that rhythmic is and the CQT is. The other one I'm not familiar. I used rhythmic with Ninja Traders. Thanks. Cam consolidation attack model, correct. Yeah, it depends on your broker. AMP uses something else, I think. CQG. CP9. I really like how all ICT students have the same view. Isn't it great when you don't have people that are arguing over trend lines and phantoms and Bollinger Bands and the Elliott wave says, oh God, no thanks. It's nice to have a community of people that are like-minded, see the same things, excited about the same things, and can work it. I like it. I like it. I'm really looking at 18.312 buy side. Why? You're bearish right now. Why would you look at that? I agree with you. When you wrote that, you were probably up here and saying, yep, I totally agree with you. Now you have to change your mind. You don't have to. I would change my mind and say, no, I'm bearish now. Because I'm actually big, bold candle, impulse leg down, right in below that guy there. Look for some support off of this now and roll over and come back down even deeper. Stop loss would be here. Not that you're trading. I'm not telling you to trade. I'm just saying, keep your eye on that as my fail safe. Entry 1, entry 2, entry 3. And again, if that breaks to the upside, comes back, taps it, I close out all my trades, start again. You're in a consolidation, so get ready to get beat up. But you're also in a, what do we see here, folks? Cam 1, 2, 3. We're actually at 1 and 2. Look at that, see? Slam down. That's why you don't want to be long. It did it again. It'll tell it to you over and over. She'll whisper sweet nothings in your ear, my friends. Over and over again, the 1 minute candles, they sing and sing and sing to you. Where's our carrot? We nailed that sucker. Look at that up there. Would we be not dancing? I called that mofo up there for... Do you get angry at yourself? Hell no. Get excited. Have a happy face, man. I called that thing when it was going down here up there. Look at that. Came all the way back and said, hey, I forgot a kid at the bus stop. Let's just pick up little Darren and let's take him on a little bus trip all the way down. Oh, he didn't bring his lunch. He didn't bring his lunch. I guess he's going to have to starve this whole time because I didn't bring my lunch. I'm on the bus, but I didn't bring my lunch. So I'm starving. I'm hungry. I'm starving, folks. Now, how many people are calling that little spot there when it was over here? When it was down here and we were still saying, I like that spot up there. Right? And you can see that on every one of these things that look like they're all mess and wicks, and we're calling every candle. We called every candle. And they become so much clearer when you back them with senior arrays, breakers, inversions, imbalances, senior arrays. The chess pieces that you call queens, kings, rooks, bishops, whatever you want. They provide you a level of support. Quick snipe. When you're in these shitty situations where they're going up and down, up and down, up and down, quick snipe. You take in, get out, scale out. If you're in with more than 3 handles, you take one out at each one of those lows, move to the sidelines and wait. Your next entry's coming right here for there. Discount array, premium array, like to like array. Okay, my eyes are going crossed here. I really looking for 2 p.m. macro in play. 2-minute inversion is still holding. I'm still bullish. Kiko Pants, you're bullish. I would say you're bullish. You're bullish. Oh wow. I would definitely say you're not bullish until you are above that inversion there. Then I'd say you're bullish again, but only till here. Inside that range, you're bullish when you get above that candle. If not, I'm still bearish. Only because of my rule. Not that you might have your own set. Do not go with what I'm saying. Stick with what you've got. I just have my own set of what I look for. And I won't try to tempt it. I'll even try to put my carrot up here to make you, keep you in there, Kiko Pants. I'll try and put this up here so that the carrot comes to you. I don't want it to go lower. I want Kiko Pants to get his money. But I think it's coming here, buddy. We're already through this candle. We didn't even we just barely validated it. We're inversion. We're closing below it. Not a good sign. We've got this one. We've got this one. So if we don't climb above that, we won't get back up here. Come on, give Kiko Pants some money. You're very smart. I want to get into ICT like you and start trading demos for fun. Yeah. Trade it for fun, man, because your live account, you put on the sidelines, you trade that. Nobody has to see that. Nobody has to see what you're doing. If you can reproduce this in a demo account for fun in front of people, imagine what you can do on your own. And live. Come on. Now you've got a body above this one. See that right there? Now I'm bullish. Back to at least into here, because to remain bullish even more, I got to get above here. So just inside this range, I'm into discount to premium array. I'm running back up here. Because now you got a body above that. See that? Come back, give it a tap. 1, 2, 3, all the way down to here. Stop loss goes here. If you lose that, same kind of principle I've told you about how to manage your trades before you take your stop loss, or keep it really tight if you want. Looking for premium array, 10 handles, whatever. You're in a consolidation, move to the sidelines. But that's how you trade consolidations. Tight consolidations. Find the range, find the PD arrays that support it, find the points where they lock in, where to get out. Like this, you cannot, well, I shouldn't say you cannot. I'm sure one of you will come up with a better system, but that is to me the tightest system I can come up with get in, get out, tight ranges, looking for PD arrays to stay on the horse. This bull is trying to shake you off. This bear is trying to shake you off, and you're like a flea on the back. You can't let him scratch you off. If you get tossed out, get back on the horse, get back on the bull, and this is how you stay on the bull all day long and not get shook off. And if you do, I'll tell you, within 2 minutes I can get back on that thing again, or 3 minutes. I can tell you when to get back on it. Because the bull will be back, you hop on the back and you're just riding it. Eventually it's going to get so tired it's going to give up and just walk back to the barn with you still on its back. Kiko Pants, I already got out, secured my profits. You go, brother. You go. Woohoo! Unless you're a girl, then good for you. Way to nail it. Order block. Come back, find support. Start pushing for our other upside. Order block. Like array to like array. Keep your eye on the like arrays, premium and discounts. That's what I mean by like to like. This is like the same. That's like the same. Premium discount. Quick, snappy, right inside a range in consolidations. And you got an inversion sitting in the middle of that one. And you got an inversion sitting in the middle of this one. So premium and discount arrays as well. Inversions that you want to see provide a level of support. Like this. You see that? Discount array, premium array. Fair value gap, fair value gap. Inversion, not yet inversion. So let's turn it into one. Mr. Carrot, come and get you some premium array, my friends. There you go, done. How many times do we need to tell you, huh? How many times do I need to tell you that this is a beautiful thing? It's a beautiful thing. Now it's rolling up. Why you have so huge delay on your YouTube? Just asking. I have no idea why there's such a delay. There's where am I? And if you guys can figure out a way to cut down on the latency, by all means, pop into Telegram, let me know, and I will fix it. I have no idea how to diminish the latency that you guys see. It's definitely not on my end. From I have like fiber optic cable in my house, so and mine travels at like 360 megabytes per second of upload download speed. See how that went from discount array to premium array? Tap it. Now we're back down into discount array. See how it starts to bang around inside here now, running out of arrays to reach for? It's now got this guy and that guy. You're really between these two right here, right now. But just that alone, on that entry right there, from there is 296 to there is 32, so you're just short of like 8 handles. Now you ask yourself, do I want to stay in 8 handles? Do I want to be mucking around in 8 handles? And do I trust my minute by minute reading that much? I don't know. It's up to you. Premium discount, premium discount. Wicks. See how the wicks touch in the discount? Run back up to premium. There's the breaker. Senior candle. We want to see it black. If you want to go bullish now, we want to see a senior candle get taken out on the upside. And this now becomes our, hey, the algorithm just turned and did a, we've got support, so we're bullish now. Bull, bull, bull. And now we're even more bullish because now we've broken to the upside. See that? And we were bullish right here the moment we broke it. Oof. Okay. My neck's getting stiff. I'm going to call her quits. That's it. That's 2:19 New York time. Keep your stick on the ice, people. Love each other. Take care of each other. If you're new to the channel, thank you so much for popping in. I do appreciate every one of you spending your time with me. I know there's lots of people out there you could spend time with, and I do appreciate you spending time with me every day, or for whatever little bit of time you are in here with me. I do appreciate that. And not just me, but all the other guys here that are committing their time to help out those people on the sidelines that have questions that I can't get to. Thank you so much for you people who help each other out. And you're welcome to pop in and see us on Telegram. Be respectful, otherwise you're gone. I'm not into the drama. I'm just here to help everybody out, and you guys help each other out along the way. Be kind to each other. If somebody has something positive or any input they give, if you totally disagree with it, do it in a constructive way that provides some support of that person's opinion. That's all I ask. And otherwise, pay it forward, folks. Do nice things for other people, and your life will be so much more enriched, as mine is being here with you folks today and every day. So thanks again for the time you have spent with me. I love you all. I love you, love you, love you. Thank you so much. And I will see you guys again tomorrow morning, bright and early. 9 o'clock New York time. I will give my quick analysis of all the charts that I have up top there, and then we'll get back into NASDAQ. I will stay in NASDAQ for quite a while now because I thoroughly believe that the NASDAQ, with all this new AI technology, is the market to be in, to catch all the big runs and for all this stuff. And as you can see, very seldom has this thing shook us off today, and we've been on this guy when he was bullish and bearish the whole time, and we could recognize when they changed their minds. So hopefully you guys can see that too. If not, stick around. We're here every day. Eventually this will soak in, and you'll see the sweetness of it, how beautiful it is to watch price action at this level and see the clarity that begins to appear in front of you. If you're not sure with ICT stuff, if you haven't studied any of his material, I thoroughly recommend that you go to the Inner Circle Trader, the Ghost in the Machine, and he has all of his material is up there for free on his YouTube website or his YouTube channel, and it's all free. Do not go paying for it from somebody else. Go to the horse's mouth. Use the ICT index for clarification on any questions you might have that haven't been resolved to the satisfaction of yourself or others. Go there. Get it straight from the horse's mouth. That index is bomber. Absolutely awesome. So with that, I thank you all so much, and I will see you tomorrow. If you have any questions, by all means, pop them in the comments below. I'll try and get to them, or pop into the the Telegram channel, and you'll catch me there after hours. And I'm on Facebook, Twitter, Instagram. I'm on all those things. So look at that. Look at that. Beautiful retracement. Snap off of that. Keep pushing higher. What a wonderful, wonderful entry. Lovely. Anyway, there it is. Love you guys. Thanks again for everything. Thanks for all you new people. Love you, love you, love you.